All right. Good evening, everyone. Do not say that we are late. It is 9:30 on the dot. This isn't other shows. Please take a moment to read the disclaimer. Myself and anybody else who appears on here are not investment professionals. We are not your financial advisor. Please take everything we say with a grain of salt. Do your own due diligence. This is purely for entertainment and education purposes only. And there will be more coming later. Somebody who's captain late is actually going to be late tonight, but he told us in advance that he will be on around 10. I believe he was going out to dinner. So we're going to cut him a little bit of slack, and I believe there will be some stragglers coming in a little later. So without further ado, Tevis, how was your week?
Good, man. How about you?
I had a good week. Let's start with what moves we made this week and then get into the market sell-off. So I personally dollar cost average down into BMNR. I started a position in Microsoft and I added a little bit of Starwood and GPIQ, which is a Goldman Sachs dynamic covered call ETF. What'd you do this week besides grow your mustache out?
I bought BMNR.
Oh, we both bought some BMNR. I like that.
Yeah, I bought Nebius.
We have to have a conversation about this. I'm writing it down. Okay.
And I bought some SoFi in my parents' accounts because they had cash in their account. And so I was like, you know what? I'm not really going to buy BMNR for them. So I'm going to buy some SoFi from them. And
interesting. So you still like, I mean, we talked about that last night, but you still like SoFi here at these levels to add?
I do still like SoFi.
Interesting. Very interesting. Yeah, SoFi I'm not adding to right now. I got to tell you, I am very on the Microsoft bandwagon right now. I think it is something strategically that I want to continue to build out a position in. That is one of the three that I am just, if I wasn't so heavy in Nvidia, it would be 4, but I really do think Microsoft, Amazon, and Meta for me are just, I mean, those are my 3 that I'm adding to.
Yeah, man. I need some money for Meta. That's the next thing that I want to be buying, but I don't know. I'm just going it one day at a time.
I'd like to get your opinion about Meta because you started a position.
I do not have a position, no.
Okay, but you want to start one. So why do you want to start a position in Meta?
Because I think it's oversold.
Okay, is that the only reason? Just that it's oversold, or?
And because it ran away from me in the past, and I kind of regret not having jumped in. And I think this is my opportunity. So oversold. I kind of regret not having bought in the past. And the third reason is that I feel like it's going to serve as a good anchor in my portfolio to sort of assuage that volatility a little bit. Because right now the portfolio is just like, it goes with the breeze.
I get that. I absolutely get that. And if I didn't have a full position in Meta, I would be adding here. If it gets below 550, I may have to expand what I consider a full position to be.
Yeah. What percentage would you say Meta is in your overall port? Do you feel comfortable sharing that?
If I knew, I would feel comfortable sharing, but I have no idea. Let me ask you, I could do some very quick math. Do you consider, when you ask that question, including retirement accounts or not?
Including retirement accounts?
Like, would you want me to give you a percentage based on everything or just taxable accounts? Like, do you consider retirement accounts part of it?
Yes, I would consider retirement accounts part of it.
What's Meta at right now? 570, 580?
Something like that. I thank you, George, for being a member. Appreciate you. I just finished
Maybe
recording my BMNR video, Stevie, and
so I want to talk to you about BMNR. Around 7%, maybe?
7%. Okay.
Yeah, around
What,
7%.
like, your largest position, what would you say that is as a percentage of your portfolio? Like, I just want to sort of know where, like, 12 maybe ish.
No, more. Way more.
Oh, okay.
20% maybe?
What's that?
S&P index.
Oh, okay. I guess. Yeah, that makes sense.
Well, that's why I asked you if you consider retirement accounts or not.
What's your largest one, like your largest
non-ETF?
Mm-hmm.
Probably around 22% non-ETF, something like that, just over 20% probably. But once again, that's why I always stress that I may not be as gung-ho on risk as others, but I also don't feel market downturns as much as others because of how much of an anchor two specific ETFs are in my overall portfolio.
Yeah.
It just helps me sleep better at night. That's all.
Yeah. I mean, I think we're in different stages of life. Let's put it that way. I have owned ETFs in the past, and now I'm purely in single names.
And there's nothing wrong with that. Listen, there's no correct way to invest. Everybody's got a different path. Everybody has different methodology. What works for me isn't going to work for somebody else. And I don't expect it to. I chop it up in baskets and I have a certain amount that in ETFs as a hedge against myself. So it is what it is. Yes, I know, Spencer. He called me old in a very nice way. I know.
I always do it in a nice way.
He's so nice. So nice.
Yes.
You want to get into BMNR? You want to do this? Let's do it.
I mean,
right. Tell me about the video, and I will tell you about the article I just finished writing. That will be out on Monday.
Mm-hmm. Well, I mean, look, I think the video is going out on tomorrow at 9 a.m. So definitely everybody check that out. It ended up being like 42 minutes. Some of the interesting pieces, of course, BMNR reported earnings.
Yes.
So that's one of the big pieces that we can talk about. The other one is the BlackRock staking ETF that they filed. Do you know about this, Steve?
I do know about this, yes.
So I think that's going to end up being fairly good. And yeah, erudition, you were watching it because you're a member. So it's live early for members, and it's going to be available tomorrow for everybody else. And the other piece is that Ethereum is trading right now, Steve. I don't know if you know this. For the equivalent, go ahead.
I do know because I ran all the numbers and I have the calculator up in front of me.
It's trading at the TVL, basically.
It's trading actually under.
Even better.
Slightly. Even better. So I found a site, BMNR Ethereum Treasury NAV tracker, and it didn't update over the past 2 days. So I put in all the stuff here and then it all updated. So when I went by everything that we learned about total diluted shares, moonshots, cash, this is wrong. It reset on me, motherfucker.
Yeah, there's also BMNR.rocks, which is similar.
This all reset on me. This is But anyway, they have it at 28%. When I did it, I actually still have the numbers up. I can replug them. It was trading at a 5% discount. I'll redo the numbers right now live. But tell me what you found that you thought was very interesting.
I mean, I just told you what I found that was interesting. I think the BlackRock staking ETF is interesting. I think what they announced at earnings, the Maven validator and staking starting in 26, and the dividend establishing the precedent for the dividend, which they can always increase later on in the future, as well as the Ethereum ecosystem benefits in general that we're seeing, all of which contribute to a really massive discrepancy, I think, with what's going on in the price versus what's going on in the ecosystem.
Yeah, I'm very happy about the staking. So this is the updated. It's now, I guess it's falling. Ethereum fell a little bit since I did this. So it's trading at almost a 7% discount to the market cap.
Yeah. Yeah. It's well, I mean, does it make you want to buy more ETH?
Yes. So I bought BMNR on Friday, and next week, or I guess, yeah, still Saturday. So next week I'm planning on buying Ethereum directly and BMNR because I am looking to dollar cost average into both positions.
Mm-hmm. Mm-hmm.
And when I go through the actual earnings report, and we have a visitor, and since I'm sure he has a lot to say about BMNR, we're going to get him on right now. We're going to continue the discussion without keeping him backstage. Mr. Chris Patel. How are you, Chris? I should admit, you know what? Damn it. Tevis would have bet me on this. Kevis and I should have had a bet about if Chris's mic is going to work or not. Because he has like 4 mics at his house and he always freaking
done. It's
there you go.
Mike, I don't know why it doesn't default to my main mic automatically.
So Chris, perfect timing because we just started talking about BMNR.
Yeah.
Have you seen that it is now trading at a discount to MNAV?
I don't think it's trading at a discount. Let me see. Because they finally published how many shares outstanding. They have 385 million shares outstanding, right?
Yep. I got it over here in the calculator.
Okay, so the diluted share count is that. They've got, well, how is the cash price what they said it is right now?
So they have 607 million in cash and 37 million investment in orbs, which is what I'm considering moonshots.
I don't really give a shit about that. That's, if that works, that works. But it's like whatever.
Yes, this is their current ETH and current Bitcoin holdings, cash, and diluted share count.
I mean, okay, so here's some learning lessons that I took away from this BMNR thing with myself. The first thing I definitely knew that the MNAV was going to collapse onto itself because, to trade at a premium to MNAV without the staking feature, it wasn't going to pan out very well. Because, I mean, people could just go buy an Ethereum themselves, right? So the key here for me is that I always knew that the MNAV was going to come down. But the thing that I would say I got wrong in the short term would probably be the collapse in ETH prices. I did not see the violent move down, especially because the news has been nothing but positive with regards to all the stable coin stuff. So it's it really makes you wonder. It's what the hell happened, And so the fundamentals of the Ethereum ecosystem are not necessarily broken, but I think the short-term volatility is something that just people are all scared of at the exact time. And I think that whole thing with the liquidation that happened with Binance that Tom Lee explained, it's a very reasonable explanation. The question, and this is the part that I think a lot of people are going to have to come to terms with, is when markets go down, they go down like an elevator. When markets go up, they go up like an escalator. And there's a fundamental reason for that. It's because when people are scared, they panic sell. They get out of things very quickly, right? Which means things go down. The thing is, over time, you have to rebuild that thesis. You have to rebuild that investor base to slowly get back in. And so you can see a gradual move up. Now, here's the question. I think a lot of people are already kind of forecasting crypto winter, quote unquote, like every 4 years is that cycle. So some people are still caught up in that 4-year cycle mentality. So there's a lot of people who may be long Bitcoin relatively like long term, but they kind of want to get out of it and wait for crypto winter to end. Now, I'm not a crypto guy like to the degree that other people are, where, you know, they have like fundamental thesis behind it. For me, the reason why I was interested in BMNR and ETH in general is because I actually see the utility value, you know, like unlike Bitcoin is literally just whatever someone else is willing to pay for it, right? In my opinion, there's no utility value. It's a store of value, but there's no utility behind it. On the other hand, Ethereum actually has utility behind it. And some of the network changes that they're going to be making in the next, 3 weeks, I think, what is it? Not even 3 weeks, 2 weeks,
2 weeks
with Fusaka,
Yep.
should theoretically help build more the way that they're changing it, and this is the bullish part about Ethereum, is that they are going to be using some of their upgrades to change up how blob fees are done. And so those blob fees are going to end up going like from 0 to a certain amount. And that certain amount is going to end up causing a deflationary wave in Ethereum, where the issuances versus the burn rate is going to go in the opposite direction. So now you're going to have more Ethereum burn as the transaction volume grows. And if you guys know about the Ethereum outstanding, it goes from like, let's say 120 million, right, to let's say a forecasted, and remember, this is all forecast, there's no guarantee that'll happen, like maybe 3 or 4% is going to get burned every year, right? So if you think about 120 million ETH outstanding and you burn 3% of that, on the conservative side, you're burning about 4 million ETH, which means next year the total out
is that they can only issue 1.51% based on the protocols of the Ethereum chain. So it's truly deflationary, because we will be burning off more through all the gas fees than what they are issuing. And with 70% of the ecosystem on layer 2 for stablecoin, as long as we get the Clarity Act signed and this start to take off, it could be a very good year for Ethereum next year.
Yeah. Like I said, I am not the foremost expert in Ethereum or Bitcoin. I am learning, but as I learn more, the more bullish I become on it. Now, the question is, how do I want to play this in terms of like a total shareholder return perspective? So for me, I thought BMNR was a great company, in that it did trade at a premium MNAV. So what I did was I took advantage of the vol. I got caught flat-footed, I'll be honest. Like I made about 70 grand on milking the vol on BMNR the first time around. And then I was like, I got greedy and I was like, I could keep doing this, and basically the covered calls that I sold in April, they did well. I'm up on those, but at the same time, the underlying BMNR that I had has collapsed significantly. So I definitely, like I said, I did not see the reaction. I did not see Ethereum going down 50% in 40 days. Not even 40 days. What was it? Less than 20 days. Like that was not on the card. That was not on my my list. So
yeah, I have a theory that there's too many people on leverage, too many people on margin, and a lot of people got caught and didn't have the cash to back up their margin, and they were forced to sell into weakness. I mean, Tevis, how do you feel about that? And do you have any option plays like Chris? Because I know you love dabbling in that stuff.
I have some spreads for 2027 that are completely underwater. I think they're down like 50%. I was averaging down to some of them, but even when I averaged down, and BMNR was like 32, 33, not 26. So, but they're for 2027. And so I think like I'm not too worried about them. But yeah, I closed, luckily, I got lucky. I closed a lot of my leaps because a lot of them were expiring in 2026. There were ones that I opened in 2024. And so I closed a lot of them before we saw this drawdown at the beginning of the month. And the rest I have just shares. So I'm not too worried.
I think for me, the strategy that I was going to use is, and I had underlying shares of BMNR, right? So I still have them. So what I did is I sold calls against those, and the premiums that I got from that I was using to buy leaps, but I was using spreads, right? So what ended up happening is I have 2027 leaps that are way, way underwater. They're like bad. So I mean, like I said, they're all the way into 2027, so it's not really that big of a deal, I suppose, if Ethereum really hits it out of the park. Now, the question that I have to ask myself is, I have this massive unrealized loss from the BMNR shares, and the thing is, I want to be in BMNR, but I also want to harvest that loss because I've got almost like a serious amount. I've got a lot of gains this year that are short term, so I'm like debating. I'm like, man, should I sell and then just buy back in 30 days? Like, so I was actually at dinner with my accountant, and I was like, what do I do, man? He's like, just wait it out. You could sell in December and then in like the end of January buy it back, and this way you have that 30-day rule and you'll be all right. And I'm like, yeah, but at the same time, like, what if we get a violent move up? And I don't know. This is one of those things that I'm a little bit lost on, like how to best play this from a tax perspective, because that unrealized loss, man, I want to realize it, and this way it saves me a lot of cash that I don't have to pay for next year, and that cash I can use to probably open up some leaps. Like, this is the thing that I hate about end of year when you've had a really good year. Like, how do you efficiently manage the tax loss harvesting? And I genuinely don't have that many tax losses that I can harvest so far. Like, I've harvested some here and there, but I've actually done pretty good. So
Yeah, and I feel like we're going to see way more tax loss harvesting on BMNR because it's down so much and December's around the corner.
yeah. So the people that don't know the 30-day rule, so basically when you have, let's say you have short-term gains, right? So you made $100,000 on one position, and you sold it, and it's less than a year. Now you've got a short-term gain, and depending on where you fall in the tax bracket, like for me, I'm at pretty high tax bracket, so now I have to pay that tax rate, and it's all short-term because it goes in as your income, like short-term income. So for me, I have to pay 35, 37, whatever the thing is going to be. And then I have to pay on top of it, I have to pay my state capital gains taxes. So it ends up being like almost like a 40% plus in capital gains that I have to pay short term. So the thing is, if you have, let's say, a corresponding loss on a position on the other side, you can basically offset that. So let's say you have $100,000 loss. So the gain 100,000 here and the 100,000 here, they cancel each other out, right? Now, the reason why that's beneficial is because you just saved yourself, let's say for me, $40,000 in taxes. The thing is, there's one rule that you have to apply. You have to wait 30 days after your sell in order to not get something called washout. And so that's the key. So right now I'd have, like, let's say I sold BMNR December 1st. I could buy it in January, January 2nd, 3rd, whatever. And so I can carry that loss gets canceled out. So that's where I'm at right now. So I have this unrealized loss of BMNR at like 200 and something thousand. Do I think that BMNR is going to bounce back to $40? It could, or it could linger at 26, 30 for the next, I don't know, month. So this is where you have to, as an investor, figure this out. So like I said, that's why I spoke to my accountant. I was like, what do I do, man? Do I take the risk of, basically selling BMNR and basically booking that unrealized loss? And then this way I'm offsetting my taxes. So he told me, and this is what he said, look, if you think that this is going to rise because the market really has gotten oversold, he's like, just sell like December 31st, or December, whatever, like a week before December 31st. And then this way you can just rebuy it in January.
But wouldn't it especially make sense for you because you booked a lot of gains on your UNH spreads? So you would it'd be an easy tax loss harvest for you to offset those capital gains.
Yeah. That's the problem, right? This is the thing. Like, I really have to get an accountant. Like, my accountant's a good guy. I like him, but I have to get an accountant who specializes in options because, like, especially with short-term gains, man, short-term gains taxes can freaking wreck you. So I was actually, that's like one of the reasons why I was a little bit scared on, what's that thing called? Like, the last couple of weeks. Cause it's like, imagine on one hand, you've got like all these gains, and on the other hand, you've got all these losses, but then like you don't want to realize the losses. But remember, at the end of the day, it's all pieces of paper, right? And you have to do what's best to maximize your gains. Like, I have a bunch of stuff on Google right now too, but I'm like, what do I do with my Google spreads? And they're all the way out into like December of 27. So I'm considering, I want to sell those, and I actually want to buy like spreads that are further out of the money, but I also don't want to realize the gains right now. So I have to wait until after January to do all these things. So it's like, did I ever tell you guys how I lost almost like $200,000 in Alibaba when I first IPO'd?
Yep. You and I have had this conversation.
Like,
who hasn't lost money in Alibaba, man? What the fuck? That thing's like straight
no,
down.
but it was so stupid, dude. It had IPO'd like a $35, like not 35, 80 something dollars. It just rode up hard. And I was like, do I sell? Like, it's overbought. I need to sell. And the reason why I didn't sell is because of freaking taxes. I was like, man, what am I going to do? These freaking taxes are going to wreck me. So I ended up holding, and then the freaking thing collapsed on me. So I was like, what the hell? So
I'm going to say two things. One, everybody should go get a tax account. In all seriousness, I don't do any of my own taxes. I have an accountant who I speak to. They do everything. I am not giving anybody tax advice. I'm not a freaking CPA.
yeah.
And the only thing that I will say that has worked for me, I have never made a decision based on having to pay taxes. My philosophy is if I have to pay taxes, that means I made money. And I am not going to let that come before keeping a position and getting screwed and having it ride down. So I am not afraid of paying taxes. I welcome paying taxes because it means I made money on something.
Yeah.
Can't you also, like, if you have options, like you have spreads, right, Chris? Can't you also just roll your spreads? And if you roll your spreads, you realize the loss to, harvest your taxes, and you can also just buy more time.
I mean, that's possible too, man. But I actually want to use the cash for other things like this. I went shopping on Friday. I don't know about what you guys did, but I'm going shopping on Monday. I'm going shopping on Monday. This weekend, what I did was I just made a list of things that I have spreads on that I'm going to close my short legs. Like some of the cruise line stuff that I have, like Norwegian, I have like 2026 options that I'm probably going to close out the short legs. And at the same time, bro, I am getting super long Meta. Like, Meta is so uniquely undervalued for something as stupid. And once again, the reason why Meta got demolished over the last month is because of this stupid tax situation. It's like there's no reason that Meta should be down this much, but it is. So now I'm like, wait a second, like, how is, like,
so
all
Chris,
the metrics I'm looking at? Yeah,
Tevis and I already opened the show up with what we did this week. So let's ask you, what moves did you make this week? And then let's all go over what's on our shopping list for next week.
I mean, go ahead. Sorry.
No, I'm asking you, what moves did you make this week? Because Tevis and I already answered that. And then we'll all discuss what's on our shopping list for next week.
So I sold against my Verizon calls because those did really well. So I sold against my Verizon calls, and I used the proceeds from that to buy Meta spreads. I didn't do just, I'm thinking about it, and I was like, man, I should just do leaps on it. But the problem is the premiums are so high. I was like, screw it. Let me just, get the volume in there. So I bought some Meta spreads.
If you don't want to say, can you just put in the private chat what the spread was just so I can say?
Sure. Yeah. Let's see.
Only because it's one. Oh, I love that.
Yeah.
Good job. I love that.
Yeah. Nah, it's easy enough. It's so close to the money. You're gonna get money on the theta decay on the long call easily, even if
What
it
were
goes
these spreads?
market
This is
stays
meta.
flat.
Is
Yeah,
this meta?
yeah, that's meta.
That's yeah, it's interesting.
Yeah, I mean, dude, meta is easy in
I
my
like that a
opinion
lot,
with
actually.
where it is right now. Yeah. So I took Meta. Like I said, I sold against Verizon. I'm gonna buy back my Norwegian. Let me just look at my notes because I actually took my notes. I may take a little bit of a loss on Webull, and roll those out to 2028. So it's not that I'm not long on Webull. I just think that they're going to need more time to figure things out. So I might go a little bit further out. I think one of the mistakes that I would say I really need to be a little bit more cognizant of is that if I'm really, really doing well on a position, I need to learn how to sell, especially when it comes to leaps. Like I typically wait 6 months before the expiration date so I don't get caught off guard last minute. But this time around with Norwegian, I was very what's the word? Like dogmatic in it. And I was like, oh, I'll sell like 6 months before the end of 26. And I wish I had sold a little bit earlier, like I did with Carnival. So this way I could have got more right now because now I'm long on Norwegian. So it's like, okay, how do I play this? So the only thing I could do is just unleash the short calls right now. If it rides up, I'll buy more, but I'll buy them for 2028. So those are the three main things I'm looking at right now.
Okay. So Tevis, what is on your shopping list for next week?
Meta for sure. I am probably going to end up buying more SoFi in the parents account. I think at 24, 25, it is definitely like appropriate, for them. Not my account because I already have a good chunk. And then the same old like BMNR Nebius is what I've been buying every single week for the past, like ever since this dip started. So I'm going to continue doing that, but I definitely want to be opening a position in Meta at some point soon.
Yeah.
Okay, so Chris, and I'm going to answer this last because I just want to add a couple of things to my table. What's on your shopping list for next week?
For me, more Meta.
Oh yeah.
More Meta. I'm not adding too much to my venture global position because I think it's going to take time. I know some people keep asking about it. They're like, venture global's got two unique problems in the short to medium term, which leads me to believe that the market's not going to give them too many rewards for now. And it's very simple. Even if, let's say, they had a $10 billion EBITDA year next year, like something went crazy. The problem is the market is going to look at that stupid BP, Repsol, all those lawsuits and basically discount the upside, right? So it's very similar to Google. And the problem is if you're doing something like spreads, then you definitely don't want to be in a position where time is against you. So if you do want to buy Venture Global and Next Decade is the first facility is not even going to generate any meaningful cash flow until like the end of 27. So, you got to wait for that. For Venture Global, they got the lawsuits in their brains right now. So the market's not going to give them too much value. So this is very similar to Google, where Google had antitrust issues, and the entire time everyone's like, Google's uninvestable. Google's going to get broken up. And I was like, you're talking about a company that's like generating this much free cash flow. Trump and the administration's already said that these guys, if they broke them up, then China could effectively like take the lead in AI. Like breaking up Google would serve no one's purpose. And then now that whole thing is behind us, everyone's like, Google is the darling of the stock market again. It's like,
No, I'm with you. So here's where I'm at. And just as a recap for you, Chris, I started a position in Microsoft for the first time this week.
Really?
Yeah.
Interesting.
I've never actually owned it directly. And I finally started a position because I think it is dirt cheap. And I bought more BMNR and I bought more of the Goldman Sachs Dynamic Income ETF, GPIQ. And I bought a little bit more Starwood just because it's under 18, yielding close to 11%. I love, you guys know I love Stir much. But
yeah,
here's where I'm at for next week. and I want to share this because it's going to help paint the picture. If Meta keeps falling for some reason, and I have a what I consider a full position on Meta, I would start adding again around 550 for me, only because I have a full position. I am going shopping on Salesforce, Microsoft, probably more BMNR, and probably Amazon next week. Now,
Nice.
I think that the market is grossly discounting tech right now. And the fact that Meta trades at less than 18 times 2027 earnings is insane. It's trading
The
less.
one thing I gotta be critical of you, like Steven, you gotta stop using these stupid analyst forecasts.
You
Dude,
got 35 analysts on the street saying it. I'm using their numbers. I'm not making up my own numbers.
No, I know. No, you have to use your own numbers.
Nope,
Screw these
not
people.
doing it.
Screw these analysts.
Nope.
Figure out your own numbers. I don't think it's that
Meta
complicated.
is going to do more EPS than that. They beat every quarter on the trajectory. They will do more EPS. I'm using the analyst numbers to be conservative until I have deniability. Don't share your own numbers. This is the analyst numbers.
I mean, I think we should do our own exercise on how we get to 17.68 PE. Like, it's not that hard. If you want, we'll just model it out.
It's pretty easy. You have 35 analysts saying that they're going to do 33.
Yeah, but the analysts are stupid, dude. Like, stop using these analysts, dude. Most of these analysts are the same assholes that tell you to buy shit. Like, oh yeah, UNH, buy it. It's gonna go to 800, and then that shit drops to like 230, and every single one of them are like,
if you had Meta at 36, which could happen, then it's at 1651. I'm not using my own numbers. I refuse to, because I'm going with what the street is saying. We know that Meta has a history of beating. So if you put 2 and 2 together, Meta has a history of beating. Likely they're going to do more EPS than that. But this is the baseline. This is what we should judging it on.
I think we should literally right now, if you want to do just a very, very simple calculation, okay? This is a very, very back of the
neck. I'll open up another tab. What calculation?
Actually, just small little fun fact, since you already had that tab open, Steve, if you go back to it, because you had Coca-Cola on here.
Yeah.
Do you guys know what I learned this week? Is that
they actually used Coke in Coca-Cola 100 years ago?
No, I knew that.
Okay.
Is that Coca-Cola and Ethereum have roughly the same market cap?
It's pretty crazy, right?
Doesn't that blow your mind, dude? Ethereum and Coca-Cola are roughly the same size.
And Coca-Cola is sold in more than 200 countries and territories.
Uh-huh.
It's crazy. So, Chris, what exercise do you want to do?
Okay, so the first thing is let's figure out a good revenue number for Meta right now. And let's get fiscal A. Do you have fiscal AI on there?
No, I do not have fiscal AI, but I will do it freehand for you.
Okay, let me just pull up my my thing so that this way we can do it together. Okay. I'm telling you, you gotta do your own stuff, man.
I do, Chris. That's the thing. Yeah, I do my own stuff. I just don't publicly show my own stuff.
That makes sense.
I'm not taking that type of chance. Like, I do my own EPS. You know this. Like,
yeah.
Like, there's a reason why I use the streets numbers. So this is their total revenue over the past 3 fiscal years and the TTM, which is 3 months, 3 quarters of this year and 1 quarter of last year. I'll give you the revenue growth rate year over year.
No. So here, just pull up the thing for me. Like, I already put the thing up there. So
1 sec.
Because it's easier to just see right here. Okay. So right now, Meta's revenue is about 189 billion a year on a 12-month trailing basis. Okay, so we are in the 3rd quarter. So let's shoot for the 3rd quarter of 2027. Right. Right now, the growth rate has accelerated from -9% in 2023 when they were going through their growing pains to now going up. Their ad revenues, their impressions because of AI are actually growing significantly right now. And so they're on an upward tailwind of growth. But we're not going to use this number. Instead, we're going to use something a little bit more conservative. So let's say revenue growth doesn't happen at 20%, law of big numbers, whatever you want to say. Let's say they only grow at 15% revenue per year for the next 2 years, right? So go ahead, plug in 1.15 against 190 billion, right? And then do the same thing, 1.15 against the other thing. And what's the revenue number that you get?
Hold on. I wasn't paying attention to what you were saying you said 15% for next year?
Yeah, 15% next year and 15% the year after that.
Right. So it's funny because I did something similar. So
yeah, because we're good investors. We know what we're doing.
What Chris is saying is that they're going to hit 250 billion in revenue in fiscal year 27 based on that.
And if you want to keep this very, very simple, like I said, high level, we're not going to do like crazy level of math here. Because like I said, if we really go into the nitty gritty, we can do a lot of math, but I'm going to just keep this very simple. Let's do
Chris
net
did
income
simple
margin.
with 15%. And what I did was I took the average of the past 3 years, which is 17.6, and I just did 17.6. So Chris and I have a band of 250 to 262 billion for 2027.
Their net profit margin usually is around, and it's been accelerating higher, but it's usually between 30% and 40%. We're going to use 35%.
Yeah, that's
right? So net profit margin is about 35. Right? So what do you get? What's the total profit you get?
So on yours, 87.7 billion
in net income. Okay. Now you got to,
And on mine, it's 91.7.
So close enough.
Yep.
Now what we want to do is figure out what the share count is going to be in 2 years, right? Let's say right now they're able to buy back shares around, let's say $700 in 2026, and then maybe $800 in 2020.
So we got a share count of 2.52 billion right now.
For what, 27?
For current.
For current. Okay. So let's just take out 100 million from that. So let's, like I said, they do about 40 million in share repurchases right now, right?
Share repurchases they have done.
They do 44 billion a year right now.
44.23.
So you could take 44.23, divide that by, let's say, 700. What do you get?
Give me one sec.
The reason why I'm using 700 because that's the average. Like right now, it's not trading at 700. It's trading at 600.
What did you want me to take out of this?
Okay, so take out, basically do 44 billion, right? 44 billion divided by 700.
Why 700? We're assuming that was the average price they were buying them back at?
In 2026, yeah.
Okay.
And the reason why is because the EV to EBITDA multiple right now is 18, but it could climb up to the 20. So,
Okay.
Right. So 62 million. So subtract that from 2026 target, right? And let's assume that they're probably going to have the same amount the year after, right? Just to keep things very even keel.
So we're going to say we're at 2.39 for the end of 27.
Exactly. So now you just take the net income that you think is going to be there, right? And just divide by the share count. Well, Yeah,
I did it backwards.
Yeah.
Let's actually type this out. I think I put an extra 0 on.
You might have, yeah. Damn, if they're making that much money, then shoot. I need to sell everything.
No bueno. There we go.
Yeah.
Okay. $38.30.
There you go. So that's
So if that number is right, they're actually trading at 15.5 times 2027 brings.
Exactly.
And that's why I use the street, because I want to underestimate and I don't want to give up my numbers. But once again, whether you want to go with the street or what Chris and I just did, it's trading at a very attractive valuation.
Yeah. So for me, my target EPS is 37. If you give Meta even a conservative 22 multiple, even though technically it should deserve 26, if you want to be bear case, do 20. If you want to do super bull case, 26, 25, and whatever's in the middle is what you get as the price in between. So it's like $37 times 20. Hold on one second. So 37 times 20, that's $740 for the bear side. And then for the long side is the same thing, 37 times 25. And the long side is 925.
That's for 27?
The end of 27.
Yeah. But you guys didn't assume any acceleration. You guys just took the average of the last 3 years.
Yeah, but I mean, dude, like business is that big, you're not really going to see too much acceleration, right? If anything, you'll see deceleration. And like I said, we only plugged in 15%. They could do 20, but who knows?
Now, keep in mind, their cash from operations has been accelerating tremendously. They've grown their cash from operations by 87% over the past 4 years. So there is a chance that their profitability explodes.
Yeah. I mean, you can also do EV to EBITDA. This is another way to calculate what it is. If you want to pull up that spreadsheet again, Stephen. So right now, and this is another thing that, like I said, you could simplify it very easily.
Let me get their enterprise value. Hold on.
Yeah.
Because I'm not doing calculations. I'm just going to pull it. It's actually there. How is that possible? We may have to do. Oh, they have no, Chris. They have barely any debt, so it's pretty.
Yeah. Well, that's because they're keeping their debt off balance sheet.
Yeah,
but you're
just using 1.5 trillion. It doesn't matter. They have such low debt; it doesn't even move the enterprise value.
Here, so let me just show everyone really quickly. Like, if you want to look at this from another valuation perspective.
And I just want to answer one question. I do use DCF models, but I don't show them and I don't really put much stock in them because a lot of people stop after 8 or 10 years. And when I'm buying a business, I'm looking at a little bit further, but I'm also looking more at short-term valuation because the market's forward-looking. So DCF isn't necessarily a great model to use.
So this is EV to EBITDA multiple for Meta. You can see here, literally in September, it was trading at a 20 EV to EBITDA multiple. And so it literally sticks around this very wide, it's very range bound. So anytime it gets to about the 20s, it starts to have its moments of pullback, right? But this is because they're accelerating their spend on CapEx, which is what's worrying people. So if you look at from a Liberation Day perspective, Liberation Day, EV to EBITDA multiples got to about 13.5. Now it's about 15, right? So the way that you basically get an idea for this is you take their EBITDA margin, which is, let me see. Okay. You can see their EBITDA margin is very predictable, right? Right now, it's about 53%. It's literally went from 31% to almost 51, 52%. It'll probably stick around to the high 40s at least, right? Even if there's some deceleration for whatever reason. So let's say what's the revenue number that we got for 2027?
Give me one sec. Your revenue number was 250 billion, 558 million.
250 billion, right?
Yeah, 250.6.
Yeah, so whatever. Well, let's just say 250. I'm not gonna do. Wait, say that one more time. I'm sorry.
250.
Okay.
558 million.
Oh, so it's only, let's just say 250. I thought it was like
251, whatever you want to say.
Yeah, so let's say 250, right? So 250 billion in revenue. Multiply that by, let's say, 0.47 for their margin, EBITDA margin. So you get an EBITDA of $117 billion in EBITDA. Okay. Now you apply a multiple that goes according to this, right? And that's when you get your enterprise value. So let me just show you guys. So right now the multiple is 15. This thing routinely goes to like 20, right? So in 2027, the EBITDA multiple, let's say it gets to 20 again, right? So you take that 117 times 20 and you get an enterprise value of 2.35 billion. Okay. 2.35, not 2.35 billion. Sorry. It's going to be 2.35 trillion. And then you divide it by the share count that you're going to get. So what's actually, then you got to take out the debt, but I don't know what the debt is going to be at the time. But basically the market cap is going to be about 2.3 trillion, sorry. And then you divide the outstanding share count. So what's the outstanding share count, Stephen? That we said in 2027 at the end of it?
2.39. I mean, you know what? I'm posting it in the private, so you can just copy and paste it. That's going to be the easiest. Okay. That's an exact number.
Yeah, so basically you're looking at $1,000. $1,000 if you did the EV to EBITDA multiple. Like if it gets it at 20, let's say it only gets to 18, then you would have, it'd be around the 800 to like 900 amount. But basically where it is right now is cheap compared to where it's going to be. So
I'm actually building out something else. God, I want to buy more Nvidia, but I have a lot of it.
I'm not touching Nvidia for one very, very good reason. The business, in my opinion,
is the same reason that you have been never in Nvidia.
It's a cyclical business.
You've been saying that since 23.
And I've been wrong. So what? I've been right on other things.
Like, and I agree with you, and I agreed with you then, and I agree with you now. I just don't think the cyclicality comes into play for another 3 years. And that's why I said then that I don't think that we're not going to have the boom bust cycle that you have in DRAM for at least a couple more years. I was on the track of 2027. This is all going to slow down. I think it's 2028, 2029 now.
I'll be honest. My thesis breaker for Nvidia now is literally the ASICs market and all these other guys. If they don't take away market share from Nvidia, they will definitely slow down growth. And the problem is with Nvidia is that if you can't sustain that current growth rate for the next 2-3 years, the market is going to sniff that out. At least they're going to sniff it out by 2027, in which case the market is going to say, I'm not giving you a premium valuation because your growth has gone from 50% to 20%. And like I said, it's a cyclical business.
We know it's not happening next year.
No, it's definitely not happening next year.
Definitely not happening next year. Whether it happens in 27 is a different story.
Yeah.
We'll know halfway through next year.
Someone said, are you long AVGO? I really, really like Broadcom. I think they are a much...
Don't. All right. Go on.
But I don't have a position in Broadcom. I don't. It's been one of those like...
Wait till you see what I build for you. Oh, boy. Okay. Keep going. Why do you like Broadcom?
Because Broadcom is just a great business, man. Like you can't doubt Hawk 10. But I haven't done the amount of research on how much money they're going to generate because I was too focused on Google. Like I thought Google was so freaking undervalued that I was like, why do I need to buy Broadcom, which is like a proxy at this point? Because look, the way that the thing was structured for me was Broadcom is going to benefit from Google's growth with its TPUs, right? Which Broadcom designs and supplies. So my long case for Broadcom was, oh yeah, Google's going to do good. So it's like, why don't I just buy Google? I don't need to, chill out on Broadcom, but I do like Broadcom. I have to do the math and see if there's an opportunity there, but I don't know.
So Broadcom has a tremendous amount of growth ahead of them. I think if I remember correctly, they have about 85% forward growth over the next 2 years on EPS, which is incredible. Yeah. And I'm not taking anything away from Broadcom. I think it's a phenomenal business.
Yeah.
I think everybody's misjudging the business and it's going to be for the business it is today. And most of that upside is priced in, because when you look at, I'm just gonna compare just to Meta.
Forget Meta for a second. You would just always pick NVIDIA over Broadcom, Steve?
Right now, yes. If I
Right
was
now.
to pick right now, NVIDIA for me over Broadcom, absolutely. For next year, yes.
And
That's
Chris,
not even a
you
question in
would
my
be
mind.
Broadcom over NVIDIA, Chris?
Yeah.
Broadcom's a bigger company than freaking Meta. But give me one sec. I should have copied this stuff so we knew what we were looking at. I apologize. This is where I have a problem with Broadcom. They're a bigger company than Meta right now, yet Meta's doing triple the freaking EBITDA, is doing quadruple the operating income, more than quadruple the cash from operations, and even with the huge CapEx expenditure, they're doing double the freaking free cash flow. Like,
Which just means that Meta is more undervalued. Buy more Meta.
That's my exact point. That's my exact point. And you look at the margins, Broadcom's margins, not really that much better than Meta's. On an operating margin, Meta is better. EBITDA, Meta is not better, but they're very close. It's the same margin business within 1% of each other for profit margin. It's just when you look at where it's trading, look at where Meta's trading versus freaking Broadcom. Like I can't allocate capital to Broadcom based on that. I'd rather buy Meta.
Yeah. Yeah, 100% agree.
But isn't it always going to trade at a premium, though, Steve, just because the vertical rates?
No, that's not always the case. If we have a slowdown in AI CapEx, Meta would benefit because they're not spending as much in CapEx, which means more of their free cash flow goes towards buybacks. With Broadcom, they're dependent on the revenues that they get from the TPU sales. So,
and
if anything,
right, and this becomes more cyclical before I think it does, it's going to negatively impact Broadcom. Whereas Meta, it's going to benefit because now if everybody's taking the foot off the gas, so do they. And like Chris said, they double the buybacks overnight.
I mean, look, Zuck did this in 2022. He's just like, fuck it, lay off 40,000 people, just committed to share buybacks, and their EPS just skyrocketed. At the same time, they had the tailwind of Reels monetization and all this other stuff. AI, like Meta is not spending all of this. Like Zuck is not the type of guy that's going to spend all of this money that's not going to end up with some tangible return. Yes, could they burn some free cash flow along the way? Absolutely. Absolutely, they can burn some. But here's the thing. If you want to grow year over year, 15, 20% from where you are, you have to keep making these investments. So
I agree. And then Tevis, for your question, look at when you line up NVIDIA with them. Look at NVIDIA's freaking, I got to tell you, this is crazy that it's a freaking hardware company because look at these margins. 53% profit margin over the past 12 months.
But Steve, they're not a hardware company. Remember, they do chip design. TSMC does all the manufacturing. So they're technically a services business, but their main service is
but they're still having to buy all the silicone and everything. I mean, they're selling a GPU.
They don't have to. I don't think that's how it works. Their business model works.
Pretty sure it does. Otherwise, their cost of revenue was almost 14 billion.
Yeah, but that's nothing relative to its income.
Oh, I'm sorry. I'm looking at the wrong. Hold on. I apologize. Bad number. Their cost of revenue in the trailing 12 was 56 billion. So that's got to be silicone, wafers, all that stuff. They have to be ordering all that stuff and just having TSM assemble it, even if they're going through TSM. Otherwise, their cost of revenue would be nowhere near 56 billion. What the hell are they spending money on?
R&D.
Dude, NVIDIA's CapEx is that low?
Yeah, they barely spend any money on CapEx.
What? Why?
Because TSM
they don't have any facilities.
Everything.
Yeah, they don't have any facilities.
They have no foundries.
They order their inventory from TSMC saying, look, we want this many chips, and those chips are then sold to end clients, and they make a margin on the chip sales. So
and
the
Chris
thing
is right. That cost of revenue could be the cost of TMC assembling everything. So I'm not really sure how that works.
Yeah.
But yeah, Nvidia's margins, I've never seen anything like this from a $4.3 trillion company. It's the largest company in the market, and its margins are shattering Microsoft and Apple.
Yeah, but I think the margins are. I'm going to go on a limb here and say that some of the stuff that they're doing does not seem very kosher to me, but it's more from a business standpoint. And I'll tell you what it is. Okay. Imagine right now you have CoreWeave and you've got Nvidia, right? And you're basically selling you're investing in CoreWeave, you're giving them, you're buying equity in the position, and then at the same time you're selling them GPUs, right? Which is not a problem for me. I don't care. Why wouldn't you heavily discount it to them? Question I'm asking you, Stephen. Why
wouldn't you heavily discount your GPUs to CoreWeave since you have
because you're
in them?
Yeah.
Because you don't need to. Just because you have an equity stake in a company doesn't mean you're going to give them a discount. And how do we know they're not giving them a discount?
No. What I'm saying is you're basically loading up CoreWeave of all this debt to buy these GPUs from you, but you will not just say, you know what, don't take on as much debt as you're taking on. Instead, we'll just give you a discount, and we're gonna just, instead of taking like cash now, we'll take more equity.
Dude, why doesn't Nvidia just buy a company like
CoreWeave?
Yeah,
they should buy CoreWeave.
No. The reason why is because you don't want blended margins. CoreWeave is low margin business with a lot of depreciation. You don't want that. Now, that's the reason why Nvidia keeps the price of their GPUs to CoreWeave high, is because this way, in the future, CoreWeave can depreciate those based on the cost that they paid to Nvidia. So let's say they paid $50,000 for a GPU instead of $25,000. Now you can depreciate that $50,000, not $25,000. So the useful life, even if it's 5 years, you're not going to depreciate $5,000 a year. You're going to depreciate $10,000 a year. Now, here's the thing. On Nvidia's side, Nvidia is going to look like a super high margin business, but then you also have this funnel of demand. It's like it's such a weird thing, but basically I do not trust Nvidia's non-cyclicality.
So, but that's exactly why buying a company like CoreWeave could make sense. And I agree with you from a margin aspect. It would definitely hit the margins, but Nvidia's got such high margins, it may not matter because they can come out with the story of we're now getting into the NeoCloud business and at cost. That way, when the cyclicality comes out, they are a preferred vendor of Microsoft, Amazon, and Google from their NeoCloud.
Steve, that's the one question that I am always shocked.
But that's what you said about Facebook. I mean, Meta, right? Like that you think that they should do that. And I agree with you. I also think, look, Nvidia's got so much cash on hand. Go buy CoreWeave flat out. Don't take out any debt. Go buy them. You now all the GPUs you produce, you're at cost building out that facility. And then
but
years from
there's
now,
other
you
layers.
have the reoccurring revenue coming in.
No, but there's other layers to it. Like you can't just build a cloud provider like a hyperscaler and just say, okay, yeah, go ahead. Like, compute is not the same thing as compute. Like AWS is an entire ecosystem.
No. But I'm not saying that they should make a public-facing cloud business. I'm saying that they should make a NeoCloud to sell the compute out to Microsoft to run Azure on for their clients because Microsoft can't get enough compute because NVIDIA is the gatekeeper of GPUs.
I don't think that they believe in it long term enough to do something like that.
We'll see.
Yeah, I think one of the comments also nailed it. They tried to buy ARM and they had issues. So I think you're going to have way more issues if they try to buy anything else.
But wouldn't ARM be a little bit of a different story because it was a chip maker?
Yeah, I think that's
cloud business. It's an adjacent. It's not the same.
Yeah. I think it would be too much consolidation in the chip design business.
But I will say, I think that you guys are right. Actually, I'm not sure where Chris stands on this, but I think Tevis and Sam are correct on some of the NeoClouds. And the more that I'm looking into them after the prices came back to where they were previously, I'm actually getting very interested in CoreWeave. And I'm starting to I can't believe I'm going to say it, starting to get interested in Iran because of the numbers behind it for a 5 to 10 year investment.
I am looking at Cypher and I'm looking at TeraWolf, both of which Google has taken equity stakes in. The thing is, I'm still
Didn't
taking.
Pelosi or Marjorie Green Taylor buy TeraWolf?
I don't know.
Some political person bought that company.
I'm thinking about it. I'm not doing it. I was actually in September, like before September. Remember, I called you and Amit, and I was telling you guys, like, bro, these Bitcoin miners are going to end up being AI data centers.
You did say that a good 9 or 12 months ago. If not longer. You did say that.
I never pulled the trigger. You know, I discussed this on the Discord and stuff because I was trying to figure out which one of the Bitcoin mining companies had long-term contracts with the utility companies that would have been value accretive. I just couldn't find which one, and yeah, I think the two that I would go with is probably the ones that Google is aligned with, which is TeraWolf and Cypher. You know, I think Google has taken equity stakes in both. So let me see. Cypher, Google. I have to see. Yeah, see right here. It did a deal with Fluid Stack. Let me just show you guys 1 second. Hello, Claire. Cypher mining reversed Thursday after Bitcoin miner announced its expanded AI hosting agreement with Fluid Stack with Google's involvement. The thing with I have to dig into the terms, but basically per agreement, Cypher will deliver an additional 39 megawatts of critical IT load, which will be supported by a maximum of 56. So, okay. The thesis behind this is very simple. These guys already have contracts for electricity in Texas, which means that right now, if Google wanted to, buy capacity, they would have to literally put in permitting and all this stuff. So by TeraWolf already having these supply agreements, they can kind of like backdoor Google into the thing. So Google's got a bunch of AI demand right now. They need to build out this hardware, but they need that critical electricity. So how are they going to get it? They're going to go through these Bitcoin mining companies, formerly Bitcoin mining companies, if they're still formally. But right here, in September, Google received warrants to acquire 24 million shares of Cypher common stock, which equates to 5.4% of their equity stake. And then Google did a similar deal with TeraWolf. So, like I said, if right now I see Google being one of the winners of the AI race, I mean, clearly everyone can see, right?
Do you mind if we start to shift to that? I don't know if I put in the notes that I sent you guys, but I wanted to discuss Google versus OpenAI. So I got some thoughts on that.
Google's going to win it. OpenAI is going to become a normal competitor. I think the lead in ChatGPT is being squandered right now, not because of anything to do with their technology, but because Google can burn cash at $100 billion a year that OpenAI has to go out there into the to the public markets and try to keep raising. And at some point, there's going to be an investor revolt. Whereas Google can basically strangle ChatGPT. And if you've used the new Gemini,
I have.
It's awesome, dude. It's awesome. So I would say Google over ChatGPT. And Google's got so many other business lines. I can't believe no one, like, they've got Waymo as a side hustle. They got TPUs that save them margin versus paying the Nvidia tax to the degree that every other hyperscalers. I mean, that's the other problem, right? ChatGPT and all these other things. They have all this Nvidia compute that they have to pay Nvidia's tax in order to build out their stuff, which means more losses all the way until God knows when. Versus Google, which is already profitable and can use existing free cash flows, that's growing, by the way, to pay for its own infrastructure. So if you were to tell me, like, Chris, who would you bet on? I think it's Google. Google and whatever the proxies for Google are.
Tevis, what do you think?
What's the question? Sorry, I wasn't listening at all.
The question is, who do you think is going to win, Google or OpenAI?
Dude, it's like it's a coin flip. Not even between Google and OpenAI, between all of them. It's a coin flip at this point because we're still in the very early innings. And sure, I mean, Google is the hottest new model on the block as of this week, but that dynamic changes on a monthly, or if not monthly, definitely quarterly basis because you have consistent updates. Like there was a time this year where OpenAI was the number one, and then there was also a time this year where Grok was number one, and so on and so forth, right? So I don't think we can call a winner right now. I think what matters and what's the interesting takeaway is that every single year, the better all of these other models get, the more OpenAI loses market share. I mean, we had a conversation way back when around is the sort of Gen AI LLM space going to become commoditized? And I mean, some people were arguing no because the first mover advantage of OpenAI is large enough to justify them always having a lion's share. But actually, what we're seeing is as a result of the advancements that everybody else is making, that OpenAI is losing market share every single year to Anthropic, to Google, to Grok, everybody else, right? So I do think it's going to become more of a perfect competition, and the real winners are going to be the picks and shovels, essentially. That you know, I don't see companies dropping off out of this race. It's tight across the board.
Here's where I'm at. I am going to combine what both of you said and spin it a bit. So I think the product OpenAI has put out is amazing. I think the new model that Alphabet has put out is amazing. Okay. The difference that I have between the two is, and we don't know exactly what these numbers are because OpenAI is not public, but this is what I have seen, that they are projected to lose 7 billion by 2028, and they're burning around 9 billion a year to try to compete. They have a 500 billion valuation, and people are talking about it potentially IPOing at $1 trillion, yet its revenue is going to be about 13 billion. Now, Altman came out and started pushing back on Gershner, but when it comes to Alphabet, they have the world's data. They're making their own TPUs, so they're able to piggyback off of Nvidia and get as many chips as they need from Nvidia, and then increase the workloads on their cloud with their TPUs to basically do exactly what they needed to do. And then they have all the other segments with YouTube and search, which is not just revenue generators, but gives them the ultimate training because it's the two biggest search engines. And they have Gmail, they got Maps, they got Android, they got Waymo, they got billions of users, they got services, they got Android. So that gives them unlimited cash. So at this point, I don't see a way that Alphabet loses. And I'm starting to think that ChatGPT, for as good as it is, I actually think that they're going to be in a pretty bad situation in a couple of years because of how much cash they're burning versus Alphabet is going to be able to eat their lunch. I think, at least. That's just me.
I'm in agreement with you. I think that's a really good thesis. I mean, that's the same thesis that I have. So, yeah.
But I'll tell you this. If I was able to buy OpenAI shares, I would buy some. I'll tell you that. Because I do think that there's going to be such a demand if they ever go public. I'm actually annoyed that they're not public because we can't see the numbers.
$1 trillion valuation?
Look, if they were a public company last year, would you have bought them?
Sure,
I
but
think we all would have.
yeah, absolutely. But I think it was a different landscape, right?
I don't think I'd pay $1 trillion for it, but
right.
$100 billion I would have paid.
Well, no, because the rumors are that they're going to IPO at $1 trillion, and I'm like,
I know.
why would I ever buy OpenAI at $1 trillion when it's like I can buy Google at like $4 trillion and get everything else?
I mean, I said we were going to look back on Alphabet being 150, 160 as an amazing opportunity. Bless you, Chris. And I'm going to say it. I think we're going to look back on Meta being under 600 as the same type of opportunity. I really do. I think I think this is just so overdone. And when next quarter's earnings come out and they slaughter EPS, because now Zuck is like, okay, the street fucked up. Let's buy back a bunch of shares and just absolutely murk EPS. And it's going to happen because they don't have the one-time accounting blip that they're going to have to take. It's already done with. Their CFO already came out and said it's going to be beneficial to us every quarter going forward. I will not be surprised. Now, keep in mind, this is assuming that the stuff that we cannot control, such as jobs, labor, Fed, that stuff doesn't completely screw us. I can see Meta 750, 800 by April-ish after next earnings.
Yeah. Yeah. Like right now, bro, Meta is the easiest shopping. Like, someone said that the stocks are on Black Friday sale. So I think eventually we get a reversal. And I think the leaders are gonna do well.
It's
amazing
that people don't want to buy stocks when they go down, but people love chasing them on the way up. It just doesn't make sense to me.
Yeah, Meta's a very high quality business, man. Like it's
such a high quality business.
It's investing based on emotions. What do you expect?
Yeah.
And I'm not saying I'm immune to it. I buy stuff on the way up too, but I also buy stuff on the way down because I know I'm not smart enough to be able to time this stuff.
Yeah. Good times. Good times.
How you guys feeling about Amazon?
I like it, but I can't believe Meta's like, why is Meta where it is right now? It makes no sense.
No, I'll tell you why. Because it got hit within legitimately 5 seconds of the print. Nobody had time to read the first paragraph of the press release. It was already down 10%.
Okay, you know what? We'll do some work for the listeners and basically explain what happened.
What happened?
Because this is basically accounting again. And I think one of the things that you guys just listen a little bit to accounting.
All right. So go ahead, you want to do it or you want me to do it?
No, you do it. You go ahead.
All right. So I'm going to show everybody how much they missed by, and I'm going to explain exactly what happened, and then Chris and Tevis are going to jump in. So when Meta reported, they reported a bottom line number of $1.05 per share, which was a $5.66 miss. Okay. But the normalized EPS without that accounting blip was $7.25. Pretty big beat. Now, the algos got a hold of it, and the market sold this off within 5 seconds. It was down over 10% in 5 seconds. Stayed down. Nobody had time to read the press release. And then on the earnings call, their CFO came out and discussed this. Due to the new regulations from the Big Beautiful Bill, there is an accounting rule that got changed. Meta had to take a $15 billion write-down against their profits, which made their EPS go down and their net
non-cash
expense. Yeah. And she specifically said, this is a one-time hit. This will benefit us in Q4 and every quarter going forward. The stock went down. Algos got a hold of it. Stop losses started getting triggered, and it went down a lot. And then on the conference call, Zuck said something about how much they're spending and that people misinterpreted. And that's my own opinion now of why it hasn't formed a recovery yet. So I'll open it up for Tevis and Chris now.
I mean, from a technicals, we can just take a quick look. So if you see this is Meta. Let me just make this a little bit bigger so y'all can see. Let me take away RSI and MACD. So this is Meta right here. Let me just actually. I don't care what anyone says. Weeble's charts are awesome.
You can double click on the side there, Chris, and it should snap it for you, like where the numbers are. Where the numbers are.
Oh, thank you. I didn't know that.
You're welcome.
Nice. Okay, so if you look here on the let's do a 5-year time frame. You can see Meta had this nice upward move since it did its golden cross in 23, and ever since then it's been doing well. The only time where it's really hit against some barriers is here in Liberation Day, right? If we look at this on the 1-year time frame, you can see basically this move all the way down from like 800 down to 590 something. So here we were peaking out right before earnings. Earnings came and there was just a massive amount of selling. If we look here on the RSI, you can see that it's way oversold. Usually when Meta gets sold off this much into the 30s, that's a pretty good indicator that, hey, the market's just being really, really like stupid. And because of that mass selling, it brought the stock down. Now, this is the part that I like, which is in MACD, you can see that the selling pressure is starting to, like, the maximum amount of selling pressure was around here. Now, the thing is, there is still selling pressure, but you see this diminishing, this red line going in the other direction. That's basically a reversal. So now you're going to see that, hey, there's actually support levels coming around here. Jason did a pretty good dive into this in on his what is it called? On the thing with Amit, with the Technical Tuesdays things. But in terms of technicals, this thing has a good amount of momentum higher. And especially with Q4, which is Christmas season, they're going to do really well. And that Christmas is going to come in and it's going to, ad spending is going to go through the roof. And then you've got rate cuts. With rate cuts, you've also got multiples expansion. So literally this thing could be at probably $700-800 by next year sometime,
Tavis, what do you think?
Yeah, I mean, I think largely it got dragged down with the rest of the market from a macro perspective, and I agree with what Chris is saying, that like it's going to rebound because the fundamentals are strong, and I mean, I think it's going to be in quick order. If the entire market rebounds over the month of December, then I think Meta is going to snap back into the high 600s fairly early on. Like, these things sort of happen, I know we're saying like, 700, 800 by this time next year or whatever, but like, I honestly think that we can be at the high 600s by the end of December, if in fact we do get a Christmas rally. So a lot of it is largely macro driven if the rest of the market pulls back, continues to pull back, or bounces.
Yeah, and you could see a lot of the buying is right here around this support level in like the 600s, right? So you see this giant volume shelf. So like I said, it's not going anywhere. So a lot of people were buying right here. So
yeah, and I do want to add a little bit of context that myself and Chris in 2021/2022, when Meta sold off, were two of the only people that were saying that this is very misunderstood, along with Gerstner. Like, Chris and I were saying it publicly, and I'm going to show some receipts on that. And I can attest to Chris because I know he said on Finance Junkies, because I was on the episode, he said it. So we had a whole long discussion about it. But they bottomed in November of 2022. I've been putting articles out on Meta since 2018. And if you look at October 2022 and then November 22 right here, Meta down 70% year to date, Q3 debacle and massive upside potential. I had very bullish. So I have never changed my stance on Meta. I have been a Super Bowl for a very long time and been a shareholder since the IPO. So
yeah,
I may be a little jaded because I've been a shareholder for so long, but I've been through everything with Meta, from Cambridge Analytica to all the FTC stuff, to the breakup stuff, to Zuck's overspending, to headcount. I got to tell you, I still think Meta's best days are ahead of them. I really do.
I was Twitter beefing with people when Meta was trading at $100. People were coming for my neck, bro. People are like, "What are you, stupid? Everyone's gonna be on TikTok." Blah blah. I'm like,
yeah, everybody's really smart when things are going down, but the hardest thing to do is change your opinion when something's
Yeah.
going correctly, or the
Yeah,
way that
it was
you're
rough.
saying it is.
It was rough, man. It was. I'm telling you, sometimes when you get into like these, whenever you're a public person, you get the haters, bro. You get so many haters, but it is okay. It's okay, you know.
Yeah, look, it is what it is.
Yeah.
It is what it is. So, what do you guys want to talk about?
Let's talk more about Meta and how we need Meta to pump our bags.
I mean, I don't even own it yet, but I agree.
I am really hoping that they crack wearables. I'm really, really hoping for that. I have a long-term thesis. Now, this is a 5 to 10 year thesis that at some point we are going to transcend screens. Now, I'm not saying that we will not have computer screens or we won't have smartphones, but I refuse to believe that we will not be operating just in the space in front of us to some degree. And I think whatever company cracks that is going to control it. And I think Meta's got a really good chance of being first to market with that. And I think it's going to be huge.
Yeah. This was the what is that thing called? Check this out. I had to call this out because I was so pissed off. Like, so Aisha, who was a friend at the time, she had wrote like Meta was diluting shareholders, and I was like, what? And this is in 2022, right, where they changed their compensation plan. So I had to like reply. I was like, wait a second, like, what are you talking about? They're not diluting shareholders. They're buying back shares. They're just using, just changing up their comp plan. So it was the dumbest thing, and everyone was posting like about how Meta was. It was the dumbest thing, man. And the thing is, she got absolutely flamed for this comment because everyone was coming after her. I mean, I didn't mean to dogpile on her, but basically, people were like making fun of Zuck. But this was the best comment. Thank you for your analysis, CFA. I can't believe someone with a CFA holder actually was saying my like Meta was diluting shareholders at the time.
Who was it?
It was Aisha. Like she's
Really?
been on she was on like she's been on like what's it called? Fox News and
Her and
Fox.
I have talked about energy a few times.
Yeah, she's a very smart person, man. But I
Yeah,
don't
well,
know
that's why I
why.
said I saw the picture and I was like, huh? I'm actually surprised because I remember she was bullish on freaking Unity at one
Yeah,
point. So the fact that she was saying that about Meta, I'm pretty surprised.
yeah, it just didn't make any sense. So that's when I saw it. I was like, whatever, whatever. Yeah, I mean, even people in the chat were confirming like this is old news from December 13th. Part of the compensation employees since share has dropped the number of shares needed to increase. It wasn't a very complicated thing to understand. They just need whatever.
Is what it is.
Yeah.
Is what it is.
I think what it is sometimes personal biases can get in the way of rational thinking. It's the same thing. I mean, it happened to me too with Palantir. If you think about it, my personal bias on valuations kept me away from a great long-term opportunity of re-accelerating revenue. But that's the thing. Like once you take a stand, sometimes you gotta be humble enough to reevaluate your thesis, whether that be on the long side or on the short side. This whole thing with I have conviction, I'm gonna hold forever, all that shit. Tell that to somebody else, man. If the thesis change yourself.
Listen, I rarely sell things, but I sell things when the thesis is broken or gone.
Yeah.
And it's not easy, but sometimes you guys say this is not working anymore. And there's other places to put capital.
I mean, there's
Yeah.
one thing you should sell.
What is it?
We've talked about that.
Palantir.
No.
What is it? What should I sell?
Well, there's only one company you hold, I would imagine, that sells socks and
Oh, listen, I have been very public that I am no longer bullish and I'm neutral. And I got to tell you, thank God I didn't freaking sell because it shot up 50 points.
Did it?
From when I turned neutral, yeah. I don't know that I could bring myself to sell Apple. You don't look. I can't bet against a company that does 100 billion in net income. It's so hard for me to bet against a company that has more than 2 billion devices out there.
Nobody's asking you to short it. I'm saying sell it.
Yeah, I'm saying so. It'd be very hard for me to sell it. I hate the fact they made a freaking sock holder for the iPhone. I hate that they don't innovate. I hate that Cook is still the CEO. There are things I absolutely hate about this company.
He's
but
out
I
next year.
have to respect the fact that they have over 2 billion devices. They do a tremendous amount of profitability, and nobody's getting rid of their iPhone or iPad. Period. It's the one company I can disagree with the path they've taken to get here, and I can disagree with moonshine investments that they've made rather than how I would have liked to see them deploy capital. I would have rather them go out and buy Warner Brothers Discovery than do some of the buybacks. I'd rather them buy Warner Brothers Discovery than do the stupid car project and beef up services and take critical pieces off the map because we see Amazon buying MGM and we see what Netflix is doing. But they didn't. Like, I'm very angry at Apple over things, but still can't get rid of it.
Yo, Matt, are you beefing with people on the comment section? What's going on here?
I mean, Matt just doesn't like us. He refuses to come on. Send him the link every Saturday.
That's fine.
Matt I know. He's actually in the middle of something, so yeah. I'm just being funny.
Yeah, well, that's where we are, guys. We are.
Do we think we're going to get a Fed cut, or do we think Powell's going to fuck us?
I don't really care what the Fed does in the short term, to be honest. I'm looking out 2 years ahead, and I see nothing but disinflation and deflation coming our way. So if that's the case, then I want to be long, low beta, high dividend, which is Verizon. Verizon's in turnaround mode. I mean, do you see that thing with 15,000 layoffs?
Yep.
That's what they're doing. They're becoming a lot more capital efficient. T-Mobile has got growth expectations, that are going to be coming down because they're raising prices, and Verizon's going to be picking up net users. They've also got value accretion from their Frontier. I mean, I've got this whole thesis on Verizon, and I know people will be like, "What Verizon?" And I'm like, "Okay, don't buy Verizon." But I like Verizon. I've made more money on Verizon doing Verizon options than doing it on the stock. And
just
the reason why
is put it on your radar back in the day.
You did. It was 100% Steven. Steven calls me up and he's like, "You're not going to believe this company. It's a solid company, generates a ton of free cash flow, and it's trading right now with an 8.5% yield." And I was like, "Okay, Steven, I will bite. Please elucidate me on who you're talking about." And I was like, and then when he said Verizon, I was like, "Oh, cool." And then I did analysis on their debt, and it made a lot of sense. Like now that they're
your reaction on Verizon was not nearly as bad as it was with SL Green the first time I told you about that. And then you went and did the whole debt profile on. You're like, huh.
I'll tell you the one thing that so much that I guess the retail investors don't get access to that I wish I could do more of is debt analysis. Like there is no investing like big YouTuber that does analysis on debt. Have you noticed that?
I think it's for several reasons. I think one, because it's a boring subject. Mm-hmm. I think two, because a lot of people aren't interested in it.
Yeah.
And I just think that it is great and there's a need for it. I just wonder how many people would be truly interested in sitting through that stuff, about learning about the different tranches, what's senior secured versus second lien, and just what the different tranches mean. I don't know that there's a huge community that really wants to go down that rabbit hole. But
the thing is, like,
I think if you can do it, you could definitely put something together for that.
So like these are the things that you guys have to remember. At the end of the day, if the business doesn't have a lot of debt, then there's really no point of doing debt analysis. Like there's no point of doing debt analysis on a company like Meta because they don't have a lot of debt, right? On the other hand, a company like Carnival Cruise Lines makes total sense. Norwegian makes total sense to do a debt analysis. Verizon, they have almost, a crap ton of debt, but that's the nature of their business. So even minor changes in the debt profile can have significant upsides and downsides to the actual stock itself, right? So if you think about if the Fed cuts 100 basis points, that benefits someone like Verizon significantly, and then when you tie in some options to it, you realize that there's actually a really good value play out there. So see, I don't know. This is where I'm a little bit more like what is it called? I don't know.
You can say you're a little bit more like me.
Yeah. Oh, me and you are thinking like that. By the way, I got out of SL Green. I don't have SL Green. I sold
Listen,
that a long time
I
ago.
said I was going to exit around 60. I exited. I put a stop loss in, I think 59.50, and I got out because I think that there's an overblown stigma on New York City right now. And if SL Green somehow gets down into like the low 30s, I will buy it again.
Yeah. Why does
New York City is going to be fine? Just for everybody's sake, it's going to be fine.
Why does Verizon not simply pay off their mortgage? I don't know, because that's dumb. Why would you pay off stuff that's like 1 or 2%? Boomer investing was. So here's the thing. You're not investing like a boomer just because you understand the debt. Like if you understand what the debt profile of company is, you can understand what their earnings potential is going to be a year, 2 years, even 5 years out. A lot of times companies, they'll look good in the short term, but their debt is really bad. So in the long term, they look bad. And then once the market recognizes it, they drop things out. Like here's an example. Everyone is looking at Fiserv right now and they're saying this is a broken business. I'm not touching it. I see value because I'm looking at their debt profile. I'm like, yeah, they've got debt, but they also have a ton of free cash flow they can use to pay down the debt and buy back shares at the same time. It's a durable business. It's going to be fine, And
I'll be the one. I'll go against Dave Ramsey. I'm happy to go against Dave Ramsey because I think he is out of touch at this point. And I think he does a lot of good. And I think there's a lot of things he says is on point. But I got a big problem with his whole stance on credit cards because he's so. What happened, Tevis?
There's a place for him in this world too.
100%. 100% there is. But I think he's out of touch because of how much wealth he has that it's not realistic for average people not to use credit cards. And guess what? You go to buy a home, you need a freaking credit score. And you build it using credit cards and getting a lease for a car. And hello, if you pay cash for everything instead of using a credit card, you leave money on the table. There's no difference if you're going to spend $1,000 a month on groceries and whatever else you have to spend money on. If you spend $1,000 in cash a month, or you put $1,000 on your credit card a month and put that $1,000 against it and are responsible, you are legitimately leaving money on the table, not using a credit card and optimizing the rewards. Where if you do 60% of your purchases on Amazon, get the Amazon 5% cash back card. Like you're legitimately leaving money on the table.
Yeah, makes sense.
I used to be that person. I used to pay cash for everything. And my accountant yelled at me and he's like, you're an asshole. And he said to me, my accountant said this, quote, I will put a 50-cent pack of gum on my credit card. You are leaving money on the table. And he drilled it into my head.
Yeah, but like Dave Ramsey is the type of person where it's like, if you're like a recovering alcoholic and you go to AA, they're like, lay off it forever. You can't
don't even do moderation.
Like you can't have any, you can't even be around it. So it's just like, yes, credit cards are a necessity in the modern global financial system in order for you to build your credit and prove your credit worthy. Not for Dave Ramsey's audience. Dave Ramsey's audience has lost that privilege when they maxed out everything and just went into like, insane levels of debt.
Well, and the other thing, do not use a debit card for making online purchases. Please, whatever you do. If you don't want to use a credit card, go get a prepaid one. Like, I gotta tell you, putting your checking account credit card in to make online purchases is suicide.
I mean, not to mention, you could always dispute charges with a credit card. You can't really do that with a debit card. So, from a protection standpoint, depending on who your credit card, like I've got my Amex is the best for that. Like there was a time where I had trouble with a vendor because the vendor made the cancellation of a subscription extremely difficult. It was LA Fitness because I used to live in Fresh Meadows in Queens. I used to drive to New Hyde Park to go to their LA Fitness near there at Lake Success. And they were like, oh, you have to submit this and you have to do this. And it's like to cancel was like a pain in the ass, bro. I just called Amex. I said, look, I tried canceling. They keep this, going. And they're like, don't worry about it, Ms. Patel. And then the LA Fitness called me. He's like, oh, like we got this thing. And I was like, well, I tried canceling. They're like, okay, we'll cancel your account. So that was awesome.
I will add this. If you have to use a debit card, hook PayPal up to it at least. Protect yourself.
Yeah.
Cyber theft is very real.
Yeah. Buying stuff online is 100% safe. If you ever get defrauded, the bank will pay you back for, maybe. Like I said, it depends on who you guys are with. Yeah. Amex is one of those things where they're a little too friendly with the, what is it called? With the customer, and businesses absolutely hate Amex. First of all, Amex charges a giant
their
fee.
interchange rate is so high.
Yeah. Yeah, like the minute a vendor looks at Amex, they're like, "Oh, this motherfucker right here." There goes my profit margin.
Dude, I love my Amex though. I use it all the time.
Yeah. Have you had to dispute anything on your Amex before?
No.
No. Yeah, I've had to done like maybe once or twice, but it was something that was just dumb. My mechanic won't take an Amex.
Yeah, there's a bunch of places that I've been to that just like will not accept it. That I need like a MasterCard or a Visa.
I keep my Visa on the side just in case I need it. Like I'll try to use my Amex for everything, but if I can't, then I'll use that. Yeah, internationally, so I don't know if you guys have seen this with Amex. They actually have a protection plan where if you get stuck in another country, they'll freaking fly you home. Like they've got some crazy stories I've heard where American Express has gone like an extra length to get people out of a really big jam.
Next thing you're going to tell me is you're buying the Breitling watch where you hit the button and freaking people come for you.
No. Is there a thing like that?
Yes. It's a special pilot version where they'll send a team out for you.
Really?
Yeah.
Really, on Breitling?
Yes.
I don't have a black card. Not even close. Not even close, man. I still fly.
Travis, you watched the watch stuff I sent you?
It's one of my tabs. I haven't watched it yet.
Okay. All right.
Yeah, man. God damn it. I got into it now. I'm screwed.
What are you talking about?
I get a text from Tevis one day. I'm deep.
What do you mean one day? Today?
I'm getting in the watch game.
Yeah, man.
I'm in the watch game. I got the box for it. So I've got 3 watches so far. They're nothing special. So one's a Movado. One is a Fossil, just an everyday wear watch. And the last one is just a regular Invicta. So, like I said, I've got to buy I'm thinking about getting. I told my wife, I said the ultimate watch for me in the future is going to be a Patek Philippe.
I knew you were going to say that.
I want a Patek Philippe so bad, man. Oh, but
dude, just get one to congratulate yourself about UNH.
Nah, I'm not going to do that.
Why not?
I'm just no. It's too
call it a commission from yourself to yourself.
Nah, I'm all right. I'm good. I'll wait. Maybe like for my 50th birthday. So in 10 years, I'll get myself a Patek or something like that.
Yeah. I was
you better go put your name on the waiting list because it is next to impossible to get one from a retail shop.
Which Patek do you guys like?
Believe it or not, I'm really not a huge Patek guy.
Really?
No, I actually like AP better.
I mean, you don't need to get super, super expensive one. I mean,
I haven't made my way to the Pateks yet.
Please don't.
No, well, I'm starting off looking at the lower brands. Let's say, I just discovered the JLC Master Ultra Thin, the Moon one. Oh man, it's so good. I want one so bad.
Oh, Tevis. So my accountant texts me. He bought another watch.
Yeah.
I'm going to text it to you right now.
Wait, your accountant bought another watch or you bought a watch?
No, my accountant bought a watch.
Oh, okay. Cool. I was seeing some people on X, they were showing off the watches and they're like, took some profits. And I'm like, really, guys? Like on a downturn, you're taking profits? Well, I guess. Why
not? It depends. I mean, look, if you're lucky enough to get some Rolexes from the actual dealer, you're into them for well under what they sell on the gray market for.
That's beautiful, dude. I love that. And it's like that one's not even that expensive, is it?
Wait, can I see it? Can you see how I show it again? I wasn't paying attention. Let me see.
I'm texting it too.
Okay. So this is
it actually is somewhat expensive, but because of the brand, doesn't feel bad wearing it in front of clients.
Yeah.
Really?
Yeah.
Oh, how expensive is this? It's not like crazy.
Yeah.
It's beautiful though.
This is the Patek that I would get. It's very simple. It's nothing like, oh my God, super flashy with grand complications. Like, I'm very simple minded.
That looks exactly like my daily wear.
Yeah.
Chris, that looks exactly like the JLC that I've been looking at. Look at JLC. Hold on.
What is it? JLC?
Yeah.
And I may get somebody on Alternative Asset Weekly to discuss just watches at some point. Because you can consider them investments, certain ones.
Yeah.
I like that, Chris.
Yeah. It's very, very simple, really nice. Like I said, I think people they really get a lot of complicated stuff, like this one, it's the grand complications.
Oh, I'm actually looking at it right now.
The grand complications, if you guys see the level of detail these guys go through. But see, this is please rob me. Ooh, Ethereum is up. What's going on? Is it turning around?
So for everybody in the chat, there is a way to quick flip certain watches, and you got to look at gray market prices. So Rolex is notorious for several, such as the GMTs, if you're into watches, the Pepsi, the Batman, the Batgirl, and the Bruce Wayne, and I guess the Hulk. They go for significantly over list on the secondary. So if you're lucky enough to get one, you'll probably be on a wait list, even though some people say it doesn't exist. If you're on a wait list for a while, you actually get it, like a Batgirl. I think the list is 11.2 or 10.8, and you can sell it for about 16.5 or 17 second you walk out of the store.
Yeah.
So there are ways to make money with it.
I also like these APs as well.
Yeah, I like the Royal Oak.
Yeah,
that's what you're looking at.
I'm not a fan of all this other shit, but these are good. I don't know.
Yeah, I like the right there. I mean, not that color, but that one right there with the chrono. Not the gold, the silver, the black one right underneath that gold one you're on. I like that. That's yeah.
Probably get this one instead. I like this one. Yeah. How much is it? How much is an AP?
A lot.
44.
Oh, that's not
30
even.
They're not cheap.
Was that
What is it?
Swiss francs or something?
I don't know. CHF? What's CHF?
I have no idea. But the crazy thing is,
Swiss francs.
these were going for like 70 or 80 on the secondary market. I'm not sure where they're going for now.
That's 58,000 CAD. So it's probably like what, 40,000 USD?
Yeah, I think they go for 44 retail in the US.
Yeah.
But there's a huge upside on the secondary.
So you could buy them on the private market.
Yeah, for a lot more. So like if you go to supposedly, if you go to an AP and you put a down payment down, it'll take 3 or 4 years to get one.
Mm-hmm. Ooh, this is the missed bought this in Japan. That's did you guys see that episode with what's his name? Grand Stefan, where he said, look, the best place to buy watches secondhand is like Japan.
Yes,
because they take care of their
yes.
they take care of their watches really well, and they're very good with like making sure things are not counterfeit. I was like, huh, interesting.
I'll send you the videos I sent Tevis. The watch market's absolutely fascinating, and there are some real investments to make in it.
In what?
Watches.
Oh yeah, yeah. Whenever anyone says that the watches, did you remember that scene from Pulp Fiction with what's his name?
Yeah, he like shows the watch, the Christopher Walken.
Yeah, Christopher Walken's like, I carried this in my ass for goddamn 7 years, but it's your birthright.
Metal or something. Just that.
God, that was a good movie.
Such a good movie. Such a good freaking movie. Okay, Spencer, I am with you. I'm that nerd that watched an entire special on CNBC about freaking Birkin purses and how the people who actually do the saddle stitch have to practice for 2 freaking years. It's insane. It's truly insane how much those purses go for. Crazy.
Yeah.
I don't even know what to say about that. But yeah, those are investments. There's so many alternative investments that you can make these days. It's really wild.
The only investment that
Chris,
I need to make now is
your thesis on private credit may be coming true.
Yeah, I told you.
You see Blue Owl, what happened?
Yep. Look, private credit is not a place where you want to be right now. The thing is, it's really hard to unload these things. So a lot of these CLOs are having tough times. So I don't know what's going to happen.
I mean, ultimately, I think Blue Owl will be okay, but it is very interesting what's going on.
Yeah. Just private credit is in a rough spot. Yeah. It just goes to show, man, so many endowments and everything else. They're like, oh, we're going to get you this steady return over the long term. They can't beat the S&P, right? And then at the same time, they're charging you arm and a leg for these fees.
Well, I think that's part of the problem, that they started selling this stuff to individuals, not private endowments, that actually need to redeem money. Yeah. I mean, these private endowments, you look at Harvard Endowment or Columbia Endowment, they don't need to redeem shit. But, all these freaking brokers that are getting paid a commission to sell these private equity funds, they're selling it to people who may actually need to liquidate at some point, and that hurts on redemptions.
Check this house out. This house is just a little bit over. Well, it's not a little bit. It's a lot over my budget. But this is the house I really, really, really like. It's here in Atlanta. Like, this is the Chattahoochee River. It's in the background. It's so nice. I'd love to buy this and invite you guys over.
The fucking mosquitoes will kill you.
I know.
Like, what are you doing?
I'm gonna get this mosquito killing drone.
The mosquitoes will eat you alive on that property.
It's moving river. It's not gonna. They can't lay eggs, bro. It's fine. But it's so nice.
Yeah, Robert, I'm with you. The house looks like 400 mosquitoes in your bedroom in the summer. I am with you.
It's a screened-in porch.
Oh, listen, it's a beautiful house. I love
Yeah.
the inside. I would be like, I would walk outside and I would get attacked. I mean, for some reason,
I'm telling you, there's drones right now that kill mosquitoes.
dude,
I'm gonna
they
get
love
those.
my blood. They love my blood.
I mean, they're like me too, but hold on, let's see. Drone mosquito.
Notice how the first thing I said was mosquitoes because they absolutely love my freaking blood.
Yeah, see this thing? Have you guys seen it?
I have seen it shoots fire or whatever to kill mosquitoes.
No. It runs into them.
Yeah.
What happens is it's like a really small drone that basically finds the mosquito, and then the drone just goes right in between, and the propellers just kill them. And it's like
take it off. I don't want to get copyrighted.
No, it's not. It's not a copyright. It's 44 subscribers, dude.
Okay.
Yeah, check this out. Fully autonomous deployment. I don't think this is real, by the way. This is just CGI. But I think eventually something like this is going to come around. I'll just get a whole bunch of these little guys that just kill all the mosquitoes.
Yeah, I'm not I gotta tell you, freaking mosquitoes and me do not play well together.
Yeah, you need one of these drones, man. This is like such a good use of like AI and drones and everything else. Just
I don't know, man.
What?
The amount
You're
of
in Canada, you don't have to worry about mosquitoes.
Sure, but like the amount of effort and investment and brain power to harness AI and like freaking drone technology and to use it all for killing mosquitoes is just so I don't know.
Okay, do you know how much mosquitoes actually cost us? The amount of chemicals that have to be sprayed. If you go to Africa, how many people die from dengue fever and all these other things? Like here in New York, we've got West Nile virus like every other year that comes by. They have to go around. They spend hundreds of millions, if not billions of dollars, killing mosquitoes. They have to. Yeah,
I'd buy it. Don't get me wrong. I would buy that product. I'm just remarking on the crazy freaking world that we live in, that people have developed a product that they're like, you know what? Let's make a heat-seeking drone for mosquitoes. Like how do you even think of that?
I think it was a sonar, but I get the point. But I mean, this is the thing. Like these are the use cases for technology that no one thinks about that are actually very useful. I mean, here's a question to you. If this was like $500, would you buy a drone killing mosquito that charges itself?
Depends where I live and what the lifespan of that drone is.
I don't know. It's like 5 years, whatever.
It literally. If I have mosquitoes year round, maybe.
I live in Georgia. Trust me, we get all sorts of insects. You know, I'd buy it for sure. It's almost like I'd buy 10. Yeah. Pesticides killed birds too. That's right. Pesticides killed birds. So if there's like a non-pesticide way to kill these stupid mosquitoes, we do it. Like my brother-in-law, they have like a really nice backyard, and I feel bad for my brother-in-law's kids because they get bit all the time from these stupid mosquitoes in the backyard. You know, Joro spiders. We have Joro spiders here in Atlanta now. My wife was telling me about them. They're like an invasive species. Big ass Joro spiders.
Yeah, Chris needs to buy some bats.
Where can I buy some bats? Like
China.
You have to go there, Stephen.
Just saying, right?
People that welt up.
Just buy the freaking drone, dude.
Yeah, exactly.
Don't even Google about the bats. Just buy the drone.
Someone's like, too soon. You know, have you guys ever been to Tennessee?
No.
I was in Tennessee during basic training at Fort Knox, and man, we had horse flies. Those things are freaking gigantic, man.
You say horse flies?
Yeah.
Yeah,
Have you
we
heard?
have them up here. They're fucking huge.
Let me show you guys. Like,
I actually can't believe I'm seeing so many things about Tennessee real estate. It's crazy.
yeah. So this is like, just so people know what a horsefly looks like. This is the size of a horsefly right here. Look at these giant things. They're all over in the South. Look at the size of that thing. They will eat up those things. And then like here in down south, we've also got brown recluses. This thing is one of the worst things to ever happen to a person if they get bit. A brown recluse, like if you see what the
oh my god
doing, it
no
necrotizes skin around it and stuff. It's really bad. So like I said, in the South it's really nice, but when we got bugs, it's not fun.
Dude, I should not be looking at real estate in other places. I'm looking at houses in Nashville right now. Mm-hmm. Property tax $60. Like what is going on here?
There's no way there's $60 property tax. They don't have state income taxes either in Tennessee.
I'm just saying this where it's saying property tax per month on the house. I'm looking at $60. Doesn't make any sense.
$60. It can't be $60. Sorry.
I don't believe that. Be wrong.
It's wrong. It's definitely wrong. Unless it was assessed, during the Revolutionary War, and it hasn't changed since.
Once you start getting out of the Northeast, it's wild how much, even if this is incorrect, just knowing what other places charge for property tax, it's crazy when you start getting out.
Yeah. I don't even know how people live in Long Island, man. The amount of tax that you guys have over there is insane.
People have lost their minds. These towns have lost their minds. I'll tell you that right now. Like there's places in Long Island where taxes are not crazy, but a lot of the taxes on Long Island are freaking insane.
Let's take a look. Let me just show you guys. Okay, let's see Zillow. And the thing is, like the real estate, it's like not even the houses aren't even that good to begin with.
Because a lot of Long Island houses were built in the freaking 70s, 60s.
Okay, this is New Hyde Park. They have a good school district around there.
How did I know? Like, why was New Hyde Park the first thing that came to your mind going to Long Island?
Because I used to be around there, so the zip code is in my head.
Oh, okay.
Yeah. This house is worth $800,000. It's a 4-bed, 3-bath, 1,200 square feet home. Okay?
Yeah, show the taxes.
Yeah, well, before we go into taxes, let's just show the house.
Wait, Chris, hold on. Is New Hyde Park considered Queens?
No.
No,
it's Long Island, Nassau County. This house is $800,000. Okay? $800,000.
And I promise you they'll get that money.
Where is this?
And
New York?
New York, right? So New Hyde Park, $800,000. What do you think the property taxes on this thing are?
I mean, I know what they're going to be around, so I'm not saying anything.
The property taxes last time was almost $11,000 in 2021. By now, it's probably like $12,000, $13,000. Okay, $800,000 for this.
Chris,
and you got the
go to Syosset. Go to a town like Syosset.
Okay. Okay. So like your average of the home over here in Syosset.
And this is why I say like people have lost their minds.
Yeah.
This is actually a nice home. 1.4 million.
It's nice on the inside, but I mean, is it 1.4 nice?
No.
Dude, look at homes anywhere in Canada, and then this is going to look like pretty great to you guys.
And then look at the property taxes on this thing. Let's see. Hold on. Oh, God damn it. Where'd it go? Just want to see the property. Oh, there we go. Property taxes. This is what, Suffolk County?
No, that's still Nassau.
2021, it was $20,000 a year in property taxes.
Oh yeah, it's probably like 26 now.
Yeah. Stony Brook is where I used to go to school. So let's see, Stony.
That's right. You went to college out there.
Yeah. Stony. There we go. Stony Brook right here. So like homes around here around campus. This is Stony Brook's campus.
And that's even crazy to me considering how far out Stony Brook is.
Dude, 1.5, but look at that thing. It looks like huge.
Oh, you'll get a lot for your money out there. It's
Five bed, 5 bath for $1 million. Like, are you kidding me?
It's an old home, man.
Hold on. Stony Brook, when you think about where it is, you're in the middle of nowhere. And
Dude,
you're so far out on the island that
Steve, just look at Vancouver or Toronto and then tell me what you can get for $1 million. And then, dude, 5 bed, 5 bath for $1 million, that looks like a dream to me.
right. I get that. But when you think about proximity of where you are to things, if you have to go to the city, oh my God, you're not living in Stony Brook.
So if you look at the property taxes for this thing last time, it doesn't even show the property taxes were, but it's up there. I'll tell you, there's a couple of places, because this is called, if anyone here is from Long Island,
Gold Coast.
It's the Gold Coast, right?
You want me to
So
give you
this
a
is
town
where
to look at to show them freaking crazy stuff?
Sure.
Wait,
sure.
zoom out a bit, Chris, so I can get an idea of where this is.
Okay, so New York City is here.
Tevis, Chris,
This is
give me
Long
one
Island.
sec. Give me one sec. So Tevis, do you watch How I Met Your Mother?
Yeah.
You know the drunk train episode?
The train, right? Yeah.
That's where that is. But that's on your way to fucking Ronkonkoma.
I love how like they make it so polarizing to be from like one of these freaking boroughs, like Long Island, and it's just like it's right there, dude. But I also get it because like I also
trust me, you would need to live here to like truly get it. Chris, show either Sands Point or Center Island.
I was gonna say right here is where, what's it called? Bell something was like pretty good, and then up north. What did you say? Sand Point?
That's Great Neck over there?
No, Great Neck is further the other way.
I couldn't see where you were. Yeah, it's Port Washington. That's Sands Point right there.
Yeah.
Yeah, dude.
This
So
is
do
right
Sands Point. Sands Point's insane.
Right here. This is Sands Point right here.
Yeah.
This is where old money is.
Look at the houses on the water over there. 30, 40, 50 mil.
Yeah. Like the hedge fund managers and stuff, this is where they live.
Somebody said, you don't get it, Tevis. Steve would split the tiles to find the jelly bean.
Yeah. But this is where New York old
This looks
money
nice,
is.
man. This looks really freaking nice.
Oh, it's beautiful.
Yeah.
Oh, it's $5.5 million. That's why it looks nice.
Yeah.
Cool.
I mean, there's some houses over there that are
Dude,
tens and tens.
23 million.
What is this stream? We have like several hundred people watching us look at random houses.
I
and
mean,
we talked about horseflies. And we talked about.
Could you imagine living there?
It's
like living in a freaking hotel.
I'm imagining it right now. It's fucking amazing.
Yeah.
Chris, where are the taxes on that before you click off?
All right, let's see. So on the $23 million estate.
Where are the taxes?
Let's see. They probably wouldn't like put that
out. No,
there.
It'll be there.
160,000 in 2021 a year.
I mean, it's not that bad.
Oh like, yeah, and you need staff to run the place and do everything.
Well, no, it's not that bad. Like look at it from a percentage comparison. It's actually cheaper from a percentage basis for the $23 million home than the $1 million home that has 20 grand in taxes.
Tevis, you buy that place, I'll rent a room.
That.
I'll rent a room from you. You buy the place. I'll rent a room.
Great. It has 12 rooms. I'll give one to you and 10 other of my friends.
Oh my God.
I think
hope you make enough money to be able to afford that.
Knock out the property taxes easy.
I think the part that people always get shocked at in New York is just there's such obscene levels of wealth in New York, and then there's abject poverty in other parts. And
insane.
even like
Whole world.
And like, and if you no, but New York, literally, you could drive like, okay, so this is the Cross Island. Okay, so this is Nassau County, and then this is like New York City, like Manhattan, like Queens, right? So if you just go a little bit further down, you can see like this area right here, like by the airport. What is this? Like Rochdale and stuff. This is where all the crime happens. You know, this is where like around here, like Rockaway Boulevard and everything else. So if you drive from here and you just go literally like a few miles this way up north to like to New Hyde Park and everything else, so all the rich suburbs are here, and then all the poor sections are like around there. But then literally after this, you get to like Howard Beach, and Howard Beach is all the nice expensive houses. See? Actually, Howard Beach is not that expensive. Huh. Where was it? Oh, Mill Basin.
You're probably thinking 5 towns like Lawrence and over there.
Yeah. I was thinking Mill Basin.
This is so far from the city that this is just like vacation homes or summer homes
this is close to the city.
It's close?
Yeah.
This is close.
Very close. City's right there.
This is Manhattan. This is where it is. Yeah.
Very close.
What would this here? This is still Long Island, Steve?
It's Long Island, but it's Brooklyn.
Yeah.
Oh, okay,
this is Long Island. So basically,
the whole thing's Long Island. So Queens and Brooklyn are on Long Island, but nobody considers them Long Island except for people who are technical, because you can have 1 foot in Nassau County and 1 foot in Queens. You don't cross a bridge.
It's like Cross Island. That's usually the demarcation line right here. So literally, if you go to school, if you live here, you go to school in Nassau County. If you go to school here, you go to like New York City public schools.
And it's funny because if you grew up in Nassau County and you live on the South Shore, you typically don't go past 106, 107. And if you live on the North Shore, you typically don't go past 106, 107. Like Hicksville train station area is like kind of that cutoff point where for some reason not a lot of people cross over. It's freaking wild.
This is not considered the city. Like the city ends at Queens and then that's it, right?
New York City, Queens, Douglaston.
It kind of depends on who you ask, to be honest, because some people think New York City technically is just Manhattan, right? And then Brooklyn and Queens, Staten Island, and the Bronx, they're just the outer boroughs, you know.
But so they still pay city tax, so they're part of the city.
Right. Man, you know what the one mistake I made? I bought my
apartment too freaking soon.
No, it's fine. I don't care. Like I wish instead of buying the condo, I had bought a townhouse.
Oh, you would have cleaned the fuck up.
The townhouses around here were so cheap during 2008, 2009. They're like,
what are they going for now? Like 1.5 or 2?
Well, if they're really done up, like let's see. Let me see if
1.5 right there.
That's not a condo. I mean, that's not a townhouse. That's one apartment in there.
Yeah, 1.5. It's in. People lost their minds.
Yeah, something like this. It's not even. It's a condo. What the hell? Let me find actual townhouse. The only thing is, you're probably gonna get like you gotta. The one part that people don't know is that this is where all the projects are. This is the Marcy. These are the Marcy projects right here. These are the Marcus Garvey projects. You know, so it's not like without its own dangers.
How do the boroughs rank in terms of like most to least expensive? Like I would imagine Manhattan's obviously the most expensive, and then how does it go?
I would rank it.
Yeah,
Manhattan, Brooklyn, only because of just Williamsburg and all those places now. And then it depends because there's a lot of freaking money on Staten Island, believe it or not. Like a lot of money on Staten Island. There's also a lot of money in Queens. And then the Bronx is probably last, but the Bronx has got some really beautiful areas also.
I'll give you a quick layout. So Manhattan is right here. This is where downtown is where Wall Street and all the money is. Midtown and this is where all the corporate headquarters are for a lot of
Upper East Side is Manhattan, right?
Yeah.
This is where there's like a lot of pre-war older buildings where a lot of like what is it called? Like pretty much a lot of money lives around here. But basically all the buildings and stuff around here. If you go further up, this is East Harlem, and then this is Harlem up here. So right now, Harlem, if you go back 20 years, no one wanted to live here.
Harlem has changed so much.
Oh yeah.
Wait, so Harlem is North Manhattan.
Yes. Yes. Yeah.
You know, you see American Gangster?
Yeah. But so I thought North Manhattan was like rich, like
you're
like
thinking
rich,
Westchester, crossing over the river.
Yeah.
Dude, I don't know.
This is Harlem, and then if you go further up, then you get the Bronx right here, you know. And then there are parts of the Bronx that are really, really nice, but they're like really up north. And then you get into Westchester, which is up here.
And I'm sorry, but I'm going to piss a lot of people off right now. You can get better Italian food on Arthur Ave than you can on Mulberry. Just saying.
Probably true.
So I thought it was the higher the street numbers go, the more sort of ghetto it becomes. Is that wrong?
I mean, if you go now, you won't notice that big of a difference because all of Harlem is gentrified, you know. Like back in the day, all of these buildings, a lot of them, you could get them for, like, New York City was condemning buildings and giving them away for $1. I remember this was like 30 years ago. Around here, it was a dangerous place to be. Now you see just restaurants all over the place. Everyone is, you know, everyone's everyone. But the key to Manhattan is proximity to Central Park. Everyone loses their mind over this whole Central Park.
Which it doesn't make any freaking sense to me.
Yeah. It's like if you live 1 block from the park, it's like, oh my God, blah, blah, blah. But then like you go 2 blocks, it's like not that big of a thing. So like, look at this condo, $11 million.
Jeez. It's kind of insane though that they've preserved Central Park this entire time without, like, you know.
And Chris, look, do me a favor on that apartment. What is the
maintenance? $8,000 HOA.
Yeah. It's insane.
Yeah. Now there's a lot of money that's in New York City, man. A lot of money.
And then you start going down into the Village and Greenwich and everything. I mean, forget it.
Yeah.
Oh my God.
Back in the day, this area right here, which was like Hell's Kitchen.
Oh, so that's where my office used to be.
Yeah. So everyone's like, back in the day, oh, Hell's Kitchen must be dangerous. Like now it's like, you know, multi-million-dollar condos.
Dude, down by Port Authority is still no joke. But if you go to Hudson Yards, I mean, oh my God. What they did to Hudson Yards is beautiful.
Steve, do you live in Manhattan?
No comment.
Let me know in the private chat. I'm kind of curious, like, where you sit in this whole mix.
Yeah, so Hudson Yards is right here. Now, they were thinking about building the Jet Stadium here.
They should have.
You guys remember. Yeah, instead, they built it in freaking East Rutherford. So it's like New York teams playing over at the freaking, in Jersey.
Chris, bring up a picture of Hudson Yards.
Sure.
Like it's legitimately crazy what they built over there.
That's the Guggenheim thing. So this is Hudson Yards.
Like none of that was there. Like 5-6 years ago, none of that was there. Like they completely built the whole area up, and when you walk around over there, it's wild.
Yeah.
Oh no, New York City has changed so much.
Yep. The place that that I used to go bike riding with my brother, because I used to live here in Carroll Gardens in Red Hook, right here. Even Red Hook, back in the day, this was like a super like dangerous area to be in, right? Now it's gotten a lot better, and now everything around here is like millions of dollars.
Wait, so
right?
where's Jersey here, guys?
Jersey's on the other side over here.
Zoom out, zoom out.
And
Right.
I'll tell you, Jersey City has beautiful views of freaking New York City. I mean, incredible.
Yeah.
Incredible. And you can take the path right in.
Yep. This is where me and my brother used to drive, ride our bikes through the Brooklyn Promenade. Back in the day, all of this stuff, which is really nice now, was just like.
Wait, is that where all the soccer fields are, Chris?
Yeah.
I know exactly where that is.
Satellite view right here.
Yep. There's that outer ledge you can drive on. It's over, and it hangs over all the soccer fields.
Yeah. And this is the Brooklyn Bridge right here. I really wanted to buy a nice townhouse around here. Like that was like my dream as a kid. Never gonna happen. Look at the price on these things.
No, they're insane. I mean, Brooklyn was one of the craziest expansions I've seen living in New York.
Yeah.
Everybody rushed from Manhattan and bought up stuff in Brooklyn and rebuilt it and made it incredible. And somehow Brooklyn became the new Manhattan, where they're getting arguably higher prices than you're getting in Manhattan for places. It's crazy.
Yeah.
Because of the view of Manhattan.
Yeah. Like, I'll show you guys the view that you get from around here from the Brooklyn Promenade. Hold on, I'll show you. Brooklyn.
We got a user asking what our top 3 positions are. If you guys,
I'm gonna get to all that stuff. So while Chris is bringing it up,
this is the Brooklyn Promenade. This is your backyard, basically.
Yeah, it's crazy.
Yeah, right here.
So thank you, Joe's Next Cookie and Me. Love it. Thank you for everybody for the memberships. I'm late to this. What's going on with Blue Owl Capital? They are no longer doing the merger with the public BDC, Blue Owl Capital Corporation, and OBDC2. There's also people redeeming and selling their private equity fund, which is creating a whole nother thing. I'll probably do a full video on it. Pedro, thank you so much for the super chat. My 3 biggest are S&P Index Fund, Meta, NVIDIA, I think, or maybe Meta Amazon. So I gave you 4.
Yeah, for me, Verizon, because I'm being defensive. I have a lot of Brookfield Property Partners, which is just dividend income. I've got a whole bunch of bond funds. I've got the Fidelity Contra Fund, which is like the proxy for all the mega caps. I also have Carnival Cruise Lines, some spreads on that. I have Norwegian Cruise Line spreads. I've got Novo Nordisk. I've got a ton of Google spreads. I've got a ton of what other things? Let me see. Fiserv. I bought a Fiserv and a UNH. So I have a lot of UNH as well. So.
You still have those UNH spreads?
I sold some of them just to be smart and taking some profit, but I still have a lot. I wish I didn't have as many Webull spreads as I have right now. So, but it is what it is. It's so funny because the company's actually doing really well. Like Webull, if you look at their earnings, they just reported 50% year-over-year growth. They're opening up in so many different markets, but the market is just not a fan. So, yeah.
There's a lot of competition in that space, and I think that's why they're getting overshadowed by Robinhood, SoFi, and then you look at Interactive Brokers. That's crazy valuation right now for the money. I mean,
yeah,
I love that valuation.
Which one?
Interactive Brokers.
Oh yeah, I'd be
careful. Love that valuation.
I think eventually Webull's gonna catch up to the valuations that the other brokers are getting. It's just a matter of time.
Webull in public will get acquired and end up we'll see consolidation in the space.
I don't think Webull will, only because they have significant Chinese ownership.
I didn't know that.
Yeah, so Webull probably
Chinese
not.
company.
They're not a Chinese. Well, yes, they are. No matter what I say, they're a Chinese company. Chinese company. So no, they probably won't get acquired. Someone should like PayPal really does need to get into the game. I think that if they acquired one of the other brokers, they could literally synchronize their offerings and end up doing a very similar thing to Robinhood, because they need a growth engine. And the one thing I'm telling you, 10 years from now, there are going to be more people trading, doing prediction markets and everything else than there are today.
I don't understand why Visa or MasterCard have not acquired PayPal at this point.
Yeah. Can I ask you guys a question? Just June is like, I'm never signing up for a Chinese broker. Like, what's the apprehension to it? Like, what is it? Because it's just China? Is that the thing? Like, I mean,
probably where the data sits.
Yeah, I would imagine data concerns and privacy and whatnot. But
half the people that are like, "Oh, I'm concerned about my privacy," bro, you ain't got two nickels to rub together. You're like, "I'm concerned about China and my privacy."
And not to mention those same half the people, they're all on TikTok anyway. So
exactly, right? You're on TikTok, which is a Chinese app, so it's like
I don't have any of that stuff. Chris, what was your question?
that was his question.
No, that was
he had something else he was going to ask.
There was?
Oh, I thought you were going to ask something else.
Yeah, no, the thing with Webull is it's not owned by China, but the majority of the investors that are invested in it, the founders are Chinese. Now, the thing is, yes, they're Chinese founders, but they have a global headquarters here in the US. They're a publicly listed US company. A lot of users here are in the US, including myself, right? So I just think so many companies, they get this whole like, oh, they're a Chinese company, they're uninvestable. And I'm like, yeah, okay, that's fine. Don't invest in them, I think once you go outside of the US, yeah, it was founded by an Alibaba co-founder and executive. That's right. See, the thing is, we have been indoctrinated, in my opinion, to be like, oh, China, China, China. But then the minute you get outside of the US, people are like, they're driving Chinese cars, like Chinese EVs. They're using Chinese products. It's not that big of a deal. Like Huawei is a major telephone manufacturer.
Isn't BYD one of the largest car
Yeah,
companies?
it's the largest. By the way, if you are anti-China, then stop buying Teslas. You know why? Because who supplies all the battery packs to?
It's hard to be anti-China. A lot of the stuff we
like
purchase comes from there.
if you're tackling it from a supplier perspective, stop buying anything. Everything's fucking in China.
This right here, iPhone. Where do you think it comes from? Do you think it comes from like a factory in Detroit? Like, no, it comes from China. All the routers, all the the telecommunication systems that we have, computer monitors, mics. So I'm not saying like, hey, you need to like go full hard and buy nothing but China. But I find that people leave a lot of money on the table because they're like, oh, I just don't want to buy China, which is fine if that's your investing philosophy. But me, I'm a little bit political agnostic when it comes to investing things. Now, yes, is there a risk to like about China being authoritarian and them cracking down on their tech companies, like the whole thing with Jack Ma getting disappeared? Yeah, that's definitely something that you have to keep in mind. But at the same time, those same businesses are actually very, very stable businesses.
No. So I think you said both points in the same sentence, right? Because let's say you own Alibaba, the actual company fundamentally could be performing very well, but you as an investor always have the fear in the back of your mind that I might wake up tomorrow and Jack Ma's in a gulag or whatever might happen, because the government has such a high level of agency in private markets that private markets are not really private markets or public markets. So you get my point. Like they're not independent of the government. So that's always a fear of investing in China. Now, using Chinese products, I'm fine with that. I think exposing your like financial data to Chinese products might be like a regulatory thing or a personal, preference thing. But I'm not saying like, hey, I want to boycott China and not use an iPhone or not, everything I freaking have is made in China pretty much. So, But investing in Chinese companies is a whole different thing because of the security that I have in terms of being able to sleep easy at night. Because if I buy something, it's like ADR shares, let's say, or the Chinese government might do something, or whatever the case may be, that's completely out of my control.
Yeah. I mean, for me, I don't mind investing in Chinese companies, but you're right. I definitely don't give it the same crazy level of valuations that I do as, like a US based company. But it's not to say that, anything that's China is not investable, So,
I mean, I was a shareholder of Baba for a while. I exited after I made money on it, after having to buy my way out of the hole. But I mean, look, for a long time, and the big thing with Baba was I had called my broker to find out what would happen if the shares got delisted. And I was okay with what happened with my broker. And I always suggested that people do that. But it was trading at a valuation that made no sense. And I ended up making money on it, thank God. But I'm no longer in it.
Yeah. I think that, like I said, I definitely will knock some points off of companies that are primarily Chinese companies, just to have that overhang in the calculation. But that doesn't mean that I won't invest in Chinese companies if they get to a valuation that makes a lot of sense. Like if you go to David Tepper, right? Tepper, if you look at his portfolio, it's loaded to the boat with a bunch of.
He does that once a stream. I'm surprised it took him that long. He does that once a freaking stream, everybody.
Chinese got to him.
He went to freaking share something and he hit exit. Once a freaking stream, he does it.
Yeah. The government took down his stream because he was talking favorably about China.
It always happens once.
What have I been saying? It happens once a stream.
Yeah,
Every
Chris Jack mod.
Yeah.
Carry on.
Let's look at some super investors, what people are invested in. Let's see. Tepper from Appaloosa. Okay. So he reduced his position in Alibaba, but that's probably his biggest portfolio position, almost 15%. Let's see if there's anyone. Pollen's been buying. It's been a good amount of selling. Right, insiders. No, there's no insider transactions. Ownership. All right. Let's look at the top 10 things that most quote unquote super investors have been buying. Last quarter, Fiserv is at the top. Look at that. Dodge and Cox, they bought a lot. But this is before Fiserv fell off. Seth Klarman bought more. Tepper bought a new position. They bought at a higher price than I did. Look at this. Yeah, look at that. Whole bunch of value guys. They bought a Fiserv in the third quarter. Well, they didn't buy in the third quarter. They bought in the second quarter. Why does it say third quarter? It was because it's reporting third quarter. But dude, Steven, definitely look at Fiserv. If you want, we can after the stream is over, we can go through the bull case for it, because I haven't written it up for my Patreon people yet, but I have to. It's not that I don't have it. I just have to put everything together and just put it. But it's worth looking at for sure.
I don't have the brain capacity to do it tonight, but I will do it tomorrow.
Not tonight. We'll do it tomorrow if you have some time. But the thesis is very simple with it. It's not super hard.
Are we wrapping there?
Yeah, I think we can.
Yeah, I mean, I'm starting to fade.
Get tired. Yeah.
Yeah, it was a long day. I got up at 7 a.m. to go to a taekwondo tournament. So
okay.
Cool.
Yeah. See, Fiserv is on the top 10 for the last 2 quarters.
Maybe we can do this on another stream, because that could be fun. You
If you
guys
guys want to do that, I don't know what you guys call it anymore, because you guys have like White Boy Weekly on Fridays where you don't invite all the colored people. You know, don't you think I didn't notice? I noticed. You need some diversity in that that Friday Friday thing.
I'm smiling not because of the diversity comment, but because my stupid brain, the first thing I thought about was like, fuck, White Boy Weekly sounds like a great name for a show.
Oh my god.
You have like the alliteration and everything, man.
White Boy Weekly, bro, get it started.
Well, if you guys want to do something tomorrow afternoon, I'm around to stream.
Okay. Let's see. Let me see if I can put everything together in like one concise like thing. But yeah. All right, guys. I think that's it.
All right. Well, thank you everybody for joining. Tomorrow we may stream in the afternoon. We will let you know. I will be on tomorrow night, Alternative Asset Weekly. Please go follow Chris on X. Please go follow Tevis on YouTube and on X. And
Wait, on a serious note, what is it called? That Friday show? What is it called? I'm sure it's not called White Boy Week. What is it?
FinTech Frenzy or something like that.
FinTech Friday, bro.
They keep changing the name, so I don't know what it is.
It's
like
been FinTech Friday. Tanner had FinTech Frenzy way back in the day.
I just call it White Boy Weekly. I don't know, whatever. Because every time I go on there, I'm like, bro, it's a clan meeting. They're talking about PayPal at the clan meeting again. It's a joke, guys. Relax. Hilarious. Ha ha ha. Come on. Chill out.
They're talking about PayPal at the clan. It's like, what else could they be talking about? PayPal.
Oh, the racist recap. I gotta do maybe me and Ahmed, we find another couple of brown dudes, you know? We gotta do like Indian Weekly or something. I don't know.
Yeah.
Funny.
All right. We will see everybody tomorrow. Have a great night.
Melatonin Mondays? I think you mean melanin Mondays, not melatonin. Melatonin is the stuff you take to go to sleep.
Everybody go to sleep.
It's called Melanin Mondays. The brown people refuse to follow me already. All right, guys, have a good one.
Yeah, so John, you're gonna like tomorrow night. Alex and Brian Pokieni will be on. It'll be the three of us. So tomorrow will be good. All right, see everyone later.
See ya.
Later, guys. Have a good one.
Tevis.